Hello. Can you hear me, guys?
Yes, sir.
Yes, sir.
Yes, sir.
The class is going on or no? We are not able to hear Professor's voice.
Okay, participants from online, can you hear me now?
Yes, sir.
Yes, sir.
Thank you. And
Yes,
sorry
sir.
for the 2 minutes I was not connected to you. Right, I was telling you the introduction why this course is there for you in the MBA program. All right. So when you are just I think as a pilot, if you have any problem in the aircraft, you are not a mechanic of aircraft and you have to do something. But anyway, you have to bring that safely to the land so that other experts can come and do some kind of repair work and it can be get it ready. So that kind of understanding you have to keep in mind. You are not going to become a mechanic, but you should know the mechanics of the aircraft. Even though you are a pilot, you are taking the company to the higher heights. Okay, you are expected to do so, but while doing so, this aspect is also going to help you. When you read some of the statements, you should not be blinking your eyes that this I don't know or what is this, the terminologies or terms or other details. Okay, so with that background only, this course is there in your particular program called Executive MBA. Okay, all right. So let us see the content of the course. We have 5 modules here. 5 modules. Basic introduction. Okay, then the accounting standards. After that, we have the financial statement, how to prepare it, how to read and understand the financial statements. Later, we have analysis of financial statements. Okay, there are so many tools available for us. 2-3 tools we are going to understand from this class. Okay, then lastly, cost accounting. Cost accounting, in which you are having some aspects dealing with the estimation of cost, control over the cost. So academically, we classify the entire accounting into 3 branches, 3 classification, three categories. One is financial accounting, another one is management accounting, and the last one is cost accounting. Okay, so management accounting talks about the analysis of the statement. Financial accounting talks about the preparation of the statement. Cost accounting tells us the various tools and techniques which are there for us to control and estimate the cost. Okay, so with this background, we are going to discuss this subject. Before we start, anybody is working in accounting, finance? Okay, what is your role, sir? What exactly you do? Okay, which company? Okay, okay. So you are looking into treasury operations. Okay, sir. Sorry, fund accounting. You are into mutual fund, some kind of a thing. Okay, okay. Anybody else? Yeah, yes, sir. You? Reimbursement. Okay, okay. So they are all into specific area of finance or accounting. Okay, but here what you are going to do is the broad understanding of accounting. Okay. I assume that you don't know anything. I mean, you are not knowing anything in accounting. So you take from the beginning. And there may be some people who have already completed their some courses in accounting, BCom or BBA. Anybody like that? BCom. So some BComs are there. Okay. So many engineers also may be there. Science and engineers. You are engineer. Okay. Okay. So when we are called by our name or our group, then we'll be happy. Okay. So they are also giving attention for us like that. So it's not like that. So I wanted to know. Normally MBA, not only executive MBA, normal programs of every college in MBA, there will be a mixed group. Okay, that's how the entry point is made. Anybody can come in. Okay, anybody, those are having any degree can be entering into MBA because business is like that. I can't be living in an isolated room. Business is not that. In the academic room like this, we can have some kind of cubic approach, cost accounting, or management accounting, or accounting alone, marketing alone, HR alone. But in the enterprise, in the business, in real life, we can't say like that. Okay, if any problem comes, of course, you may be a specialist. You may be a specialist, but that cannot be a isolated approach. That could be a holistic approach only possible in the businesses. Okay, and the business environment is changing a lot. Every day, new things are coming, but the basics are not changing always. The basic framework, what is business, that remains always. But how the business is, that changes. Okay, what is business? What do you mean by business? Is it so low level question to ask an executive MBA student? Anybody? What is business according to you? Anybody is doing a business? I asked those who are working in accounting, but anybody is doing your own business? Entrepreneurs? No. Okay. Anybody? Yeah. Okay. What is business? What is understanding of you? The term business is. Sorry. Give and take. Give and take means I am giving you my lecture. I'm taking something from university. So that is business. 1 second, sir. Let him complete. Let him finish. Let him finish. Yeah. Yes, sir. You'd like to add something? So give and take. Give and take is business. Purchase and sales. Okay. And earning profit. Yes, sir. Okay. Okay. Return on investment. Okay. Sorry, is taking us the analysis concept. Return on investment is coming under analysis. But anyway, we are expecting something return. We are not assured with, but we are expecting, anticipating. We are just thinking of taking some return. How much I invested, how much I take back, how much I'm getting back. So that is analysis. How is it worth taking this much, or is it further having a chance to develop my returns? That will come to later. But anyhow, it's an activity. Anybody? Anyone is trying to tell any other view of what is business? Those are online. Anyone reply from students online? Am I audible? Yeah.
Yes, sir.
Anyone reply from the students online? What is business according to you? It may sound very, yeah, yes. Anybody? Transaction? Okay, between two parties. See, we know everything, but when you put it in the record, I mean, writing, that becomes little difficult. Nobody in this room or online without knowing what is a business. You are all into that. You are all putting your hands into that. Okay. Business. Okay. Business is an organized effort in which we do some economic activity. Economic activity with the intention of earning profit. Earning profit. Earning some money. That money technically in accounting called as profit. Okay, what is profit? If that is a business, what is profit?
What we are invested getting more than what we are.
Okay.
The difference between what we are asset.
1 second. Let her own opinion. Yes, madam. Whatever you investing,
What we are getting.
What we are
Difference
getting.
between that is what
difference between
profit, what we are spent and what we are getting.
Okay, now you're changing. First you told investing. Now you are replacing that word, what you are spending. Okay, today I spent morning 250 rupees for the cab to come to the campus. While going, the university is going to give me some money, suppose 2,500. So the difference between these two is profit? Yes or no? Confusing. Sir, I already have some point about accounting and profit, but you are confusing me instead of telling me some clarity. Is it so? 2,500 I'm getting from the university when I'm leaving the campus. When I'm coming to the campus, I was just minus 250. So is it a profit? If I am a business organization, that's a profit according to her definition. Okay. Anything else? What is profit? Somebody is trying to say something. You are attempting something when she was telling. Yeah. Simple. You are accounting student? No, that's great. Selling price and the cost price. Cost price of what? Okay, this is a product. I bought it for 100 rupees. So what is this? 100 is the? Yes, it is selling price for the person from whom I bought it. For me, it is cost price. Okay, I'm selling to this gentleman the same product for 150. So according to your definition and equation, the profit is it so? According to the equation, it is mathematically correct. Is it really correct? If I ask like that tone, then it will answer will be no only.
So we need to look into the
Any other
overheads.
comment?
Yeah.
Yes, sir. Yeah.
Yeah, we need to look into the net profit. So what is the overheads, expenses, and other miscellaneous things, and calculating that. So reducing that in that amount from the
Okay.
gross profit, we'll get the net profit. So that is the real figure of the profit.
Okay. Experts will always confuse the learners. One second. We are trying to understand what is profit. This gentleman, your classmate, is telling me two more concepts to get clarity. That is gross profit, net profit. I don't even know what is profit. Okay, anyway, that's a good start. He is telling very accurately the overheads. He was using some words, right? That's all very technical terms. Overheads, okay, and gross profit, net profit. True. Okay. So let us try to understand what he's saying. The cost alone cannot be minused from the revenue. Cost of product cannot be alone minused from the revenue. There are some more things, overheads. Sir, can you explain what do you mean by that overheads?
Yeah, our operational costs and the expenses, which is
Okay, the
happening
showroom
for
may be
running them.
taken. Showroom where I am selling this product.
Yeah.
Showroom rent may be there. I might have
Yes.
employed some of the salesmen, selling
Salary.
people, salary. All those overheads. We'll come to the cost accounting. You'll understand more about overheads. Simply one word, since he touched upon the concept, overheads. We are classifying the cost. I think it is too early to tell all these things. But anyway, we touched upon. Let me try to explain in such a way that you can understand. Cost is classified into so many categories. We are giving name for each and every group. Assume like that. Group. Okay. Heads of the cost. Material cost, labor cost, expense cost. Don't wonder, sir, expense itself is a cost. What is expense cost? That's the classification. Material cost, labor cost, expense cost. If all these three things are there as a direct nature, in addition to this, if you incur anything over and above the normal, these three heads, that is called overheads. That is how we name it in academics, overheads. Maybe the rent, which cannot be directly apportioned to the cost of a product, is called as overheads. Now, this room is taken for rent, assume. How much we are paying the rent? Okay, in the same classroom, today we are conducting executive MBA. Tomorrow we may conduct some other course called engineering, BTech or BE. There are so many courses may be conducted in this classroom. How much total rent paid for this particular room for 1 year? Suppose assume it is 12 lakh rupees, 12 lakhs. Out of these 12 lakhs, how much you are going to charge to each and every program, each and every degree, which are happening in this particular classroom? That is little difficult. We can't accurately tell. Okay, suppose we are supplying a laptop for all the students in the college. We can easily take that particular cost of laptop to each and every student. It is easy. Directly it is connected. In manufacturing industry, service industry, or any kind of thing, this is always there. That is called overheads. Let us stop this. We'll come to cost accounting, study more about this. Okay, come back to the profit. So profit is nothing but excess of income over expenditure of an organization over a period of time. Okay, profit. Now we are with three words. Profit is equal to income minus expenditure. Okay, keep this alone. Now come back to the business. What are the different forms of owning a business? Which is the company you are working for, sir? If it is disclosable, tell us. Yeah. Private limited. Why, sir? Why it is called private limited? Okay. Okay. All are individual only, no? So public limited, they won't make a group. So in private company, public cannot be involved. Who is public? Are you public or not? Are you one among the public or not? Okay. Your owners of your company, the owners of the company, are they not the one among the public? They are not? They are. So in your company, public is there or not? They are. So then what is public limited and what is private limited? Really? Yeah. Okay, sir is bringing, so I told my expert will always confuse us. Sir is bringing one more thing, listed company. Then we have now to be clear about these three. We are into trouble now. Private limited, he brought one more company to explain what is private limited. He was bringing one more example of public limited. See, don't laugh at me. It's a definition given by the Companies Act. Public limited company is a company which is not a private company. This is the definition given in Indian Companies Act 2013, section 2. So in that way, he is taking the help of public limited to help the meaning of private limited. When he was talking about, he's bringing another concept called listed company. Okay, fine, no problem. Let us have this kind of 2-3 minutes. Yeah, anybody? You completed, sir? Are you done with? Shared with the public. In private limited, it is shared with the. Okay, okay. So don't you think that in public limited also founder will be there? Yeah, he'll be there, but they are very much generous enough to share the profit with public. That's great. Anybody?
No, when the private company.
1 second, sir. One of your classmates in the class
Sure.
is trying to say something. Yeah. In the public company. Okay, okay. Which one? Private company cannot be controlled by SEBI. Our liability is increasing. Now I have a lot of things to explain. SEBI has come into picture. SEBI, Securities and Exchange Board of India. Okay, fine, sir. Thank you. Anybody else? Somebody from online, I mean, trying to say something? Yes, sir. Your turn now. The
Yeah,
person who
Ajit
is
brother.
attempting to say something.
Yeah, actually, it is a non-governmental organization, and it's just for small business. Basically, we consider it a
Okay.
private.
Private company is a non-governmental organization which is having some small business. That's what he's trying to say. Right.
Right.
Yeah. Anybody else? Final one. Last chance. Last take. Yes, sir.
See, the private limited company actually, when they wanted to, take the financial support from the public by,
Okay.
issuing the IPO. So actually they can, go ahead and then make that as a, public limited. Okay. I mean, pardon me
Okay.
if it's wrong.
No problem. No problem. Yeah, if you are wrong only, I can be right.
Yeah, sure.
Okay. That's okay, fine, good. Sir, final one. The one of your classmate in the class is attempting to say something. Yeah, final one. Yes, I'll tell them next. Okay. He's telling something else. See, public sector. Okay, you mean public sector as public company. Okay, thank you. Thank you for your inputs. Now let us understand what it is actually. Okay, there is a confusion. So there is a role for a teacher to clarify it. There are different forms of ownership. Let us come to this. This is one of the forms of ownership. Which one? Company itself. Company itself is one of the forms of ownership. In that we have so many listed company, public company, private company, small company. Many. We'll come to that little later. Okay. So there are different forms of ownership. How can I own a business? I can own a business on my own. I am the only authority for my business. Only owner for my business. Proprietorship. Sole trading business. Only one owner. Rest of them are just supporting from external. Okay. Lender, some other banks, they will give you money on loan, as loan. That's one. Second one, partnership. Third one is Hindu undivided family business. I'm not talking about the family business. Family business can be either in the form of partnership, or it can be in the form of company, or it can be in the form of sole proprietorship also. Family business is altogether different. I'm not talking about that. HUF is something different from family business. HUF is a legal status assigned to some of the business organizations. Ancestral property, business, and the senior most person, Karta, the manager. All the members of the family is co-portion of the business. That is one model. I mean, one forms of ownership. The last one is cooperative form of organization. So all these five only we have in this entire world as a form of business ownership. If I am owner of a business, if I am a businessman, I can be a member. I can be connected to any one of these five category only. There is nothing more than this. First of all, understand the framework is set now. Business means it can be of any one of these five. Okay. Now, any one of these five ownership business can do three ways of business, three models of business traditionally. One is buying and selling. Sir, I don't do anything. I'll go to a place where the product is available for cheaper price. I will find a market where the demand is there for that product. I'll supply it. I'll just take the margin. Buying for 10 rupee, selling for 100 rupee, 10 plus overheads minus from 100, remaining is my profit. Profit is reward for organizer business, risk taking. That's a trading business. Another one, sir, I don't like this business, sir. Even though 90 rupees profit is there, but it is very less. Today, people are looking for quick money. Everything quick, instant only. Instant. Those days, we studied this for 3 semesters, but now you are studying it for 3 weeks, 6 classes. World is going like that. I can't tell you more stories. Our professors come to the class and they will narrate story. Again, the concept is coming, storytelling. Those days, our professor, one full class, he will tell story only. 59th minute, he will tell something. Debit what comes in, credit what goes out. Everybody will go out. 60th minute, over. That was the case. But today, it's not so. I can't talk to you outside the syllabus or something relevant to syllabus always. Because time is important, crucial for all of us. We are working. You can't spend your time more. Only 2 weeks, 2 days were coming in a week. Okay. So, what's the point? System is, I mean, the business model is changing. Service industry is taking the economy to the highest level. Service industry. I don't buy and sell anything. I'll just provide some service. The needer, seeker will be there. I provide a service. I'll earn money. This is service business. There is another one. If I buy something somewhere, somebody should manufacture. No. If everybody is a trader, then who is going to manufacture? Somebody should be there. They are finding the opportunity of making a thing, making a product. So example for this, I don't want to tell, you know, everything, these 3 businesses you are seeing in our life. Okay, so a business, first of all, understand the business, how it is owned. Whenever you come across a business name, you should first think about what is the form of ownership of the business. Then second one, what business they are into. Are they into service business? Are they into trading business? Are they into manufacturing? After deciding this, service is a ocean. Okay, in that service industry, there are so many possibilities. Insurance is a service, banking is a service, hotel is a service. Okay, nowadays there are so many. We never even imagine some kind of business model. The car companies nowadays, you see, without owning a single car in this world, these transport providers, Ola, Uber, all these people, how much, what is the business model? We never even thought some 10 years or 15 years back. So business models are developing day by day. Invention, disruptive invention. I invent one thing for one purpose, but that will kill the existing product of 3, 4. Music player, see, those days, CD player. 3 CD, one single player, only 3 CDs we can insert. Those days, one film will be there in the 3 different discs. In one single disc, we can't store one full movie. Okay, if it is normal movie, I mean CD player, we have to change the CD one by one after the 30 minutes or 40 minutes like that. But today, the CD player concept itself is gone. Cinema theater. We have theater in our mobile itself today. So changing like that. Okay, so what I'm trying to say is each and every business will have its own subcategory. Service also will have subcategory, production, and then trading. So you have to check first which business you are into and what is the form of business ownership. Now come back to accounting. So this is the business background. Now we as a student of accounting or one who is trying to understand the concept of accounting should know these first 2. Okay, now let me spend few minutes on understanding these forms of ownership, especially company form of organization. What is company? I may be working in any one of these 5 organization forms of ownership, which may be doing any one of these 3 businesses or the combination of the 3. Nowadays, nobody is doing only one. I want to be a conglomerate in the particular industry. See, take example, Tata, Reliance. You name anything they are into. Reliance you take, you name anything in our life. Reliance, sir, I am there, come. Like that, it is waiting for us. Reliance, okay. So what I'm trying to say is, after understanding this, we as an accountant or we as a student of accounting or a manager or a finance person should look into the aspects by keeping these 2 points always into mind. Accounting alone, if you're expert, if you say something that may go wrong. We are having a standard BP level or sugar level, something like that we have. Okay, somebody is climbing 5 floors and coming to the 5th floor where the doctor is sitting. He is checking the blood pressure. That may not be a correct one. Immediately after checking that, the doctor is giving a prescription. Okay, you are having high PP. Okay, only 5 years guarantee. Take this prescription. So what is correct? Who is correct? The doctor is correct. According to his understanding, according to the standard, is correct. But without knowing the particular case, if you prescribe something that is not working out, that has some kind of problem. So you people, after analyzing statement, you cannot simply blindly tell our own views according to the theory what we study here. We have to see who is the patient, what is the condition. Okay, so come back to accounting now. Now, these forms of ownership, what is a company? What is a company? Private company, listed company, public company, small company. Before understanding all these things, you should understand what is company. What is a company? An organization? Yeah, that is the wrong understanding. If you do not add some point to that, is correct. Last would be not a full stop, comma, which is, anybody would like to correct this sentence? Any organization which does business. Why don't it can't be a partnership? What is a partnership? Any organization which does business. What is sole proprietorship? Any organization which does business. What is HUF? That's also an organization which does business. So this universal definition. There are some doctors, they will give same medicine for all the diseases. Universal curer. Okay, correct. But we have to add some point to that. Anybody? That's organization. No? Group of people working for a common goal. It's called organization. It need not to be a partnership. It can be a partnership. It need not compulsorily to be a partnership. It can be a company. It can be a sole proprietorship. It can be any organization. Group of people working together in the achievement of a common goal is called just organization. Yes, anybody? For the, that's what, gentlemen, I'm telling you. See, in partnership also, group of people are there. They're working for a common goal. They're doing a business. Okay, let me just tell you. Company, the word company, what we are using in colloquial life is something different from the eyes of law. When I say company, that's one of the forms of business ownership. There itself, there is a clear idea that that is distinct from other four kind of organizations, other four kind of business ownership. That's clear. If that is clear, means you have to go a little more further. That's company is not a partnership. Company is not a HEF, but all are organizations. All are business organizations. All are entities. Yeah, what is company? Any one try, last try. Anybody from online? But you are all working in a company. You know what is company, but little difficult to tell what is convincing me. That's it. Only problem. Yes. Anybody from online? If I say, then you laugh at me. Simple. Company means an organization that is incorporated under Indian Companies Act 2013. That's it. So what is this definition? But that is the definition. Yeah. It is that nice definition. Once more. Okay. Any organization that is incorporated, that is registered under Indian Companies Act 2013 or by any other earlier acts which were there in the existence of those days. Simple. Undisputed definition. Nobody can come and tell you any other comment on this. Because authority is saying, company law itself is saying. Company law says that any organization registered under this act. The act is saying this act. This act means 2013. So we are taking that. Simple. Then how does it differ from other organizations? They are all not registered under Companies Act. Why do I say this? Sir, in accounting class, why do you talk about companies? We have 5 organizations, 5 ownership of business, but by and large, company form of organization only is dominating in the economy. We all like to working in a company, not in a partnership business, not in a sole trade. Suppose there is a sole trading business. Your friend is having a business. The entire worth of the business itself is 1 crore. Will you be ready to work there? Your salary may not go beyond possible maximum case more than 1 crore. He can't give more than the net worth for you salary. Right? What is net worth? What is net worth? The value of the business. Okay, we'll come to that. Just to keep the mind. We'll come to that just 2 minutes after. Okay. So come to this company. Company is only dominating in the economy. So we are interested, and the course is also emphasizing on accounting for company. We are seeing the accounting from the point of view of company. So how does it differ from other forms of ownership? It is not differing from other forms of ownership, but it has some more legal binding on us. If you're making accounts of a sole proprietorship or a partnership, that is not at all governed by the government, because it's your business. If you do anything wrong, it's going to affect you and your family. That's all. Or the close people who are having a faith on you, who are giving money to you. Satyam did a fraud. Satyam was in the limelight a few years back. I think some 5, 6, I mean more than that. Okay. That problem is shocking. I mean, giving the shock to the entire economy of the particular country. When Ramalingam Raju was coming out and conducting a press meet, the stock market is having a shock. Why? Because money is invested by every individual like you and me. Now you are bringing that point, individual company. What is a company? Shareholder will be there in the company, right? Those who are contributing money to the company will be called as ownership pattern. If they're taking, then they will call them as shareholder. Any people who are contributing money to the business is called owner. Generally, owner. He is a partner in a partnership firm, co-partner in the HEF, proprietor in the sole trading organization, member in the cooperative form of organization, shareholder in the form of company. Okay. Then we have 2 type of companies. One is private company, another one, we are having so many. Since we're touching this, we'll come back to this accounting. Private and public. Private company, as somebody told here, their number of members are limited. 200 is the maximum number we can have in a private limited company. Public company can have unlimited number of members. Shareholder can be unlimited. Okay, then private limited company cannot issue their securities to the public. They won't take money from the public. Sir, now only you told everybody is public. Then what do you mean by public here? General public here refers to the people outside that particular framework of the shareholding. I and these gentlemen, two are joining together. We are forming a business organization in the form of company. We are registering our business under Companies Act. Okay, private limited, 2 members, private limited, over, started. If one more member wants to come into this business, we two have to agree. If we two are not agreeing, if even one is not agreeing, the new member cannot come into the business. But it is not in the case of public company. That's the only difference. Anybody can buy the shares, anybody can sell the shares in the public limited company. Okay, minimum 7 members need to be there in the public company, maximum unlimited. Minimum 2 members can be there in the private limited, maximum is 200, excluding the present and past employee members of the company. Okay, so company. Why I'm talking about this company? What is listed company? Can a private company be a listed company? What is listing actually? What is listing? Not SEBI, stock exchanges. See, public companies are allowing the members to sell their shares without the knowledge of the fellow members or with the company itself. Suppose anybody is having the share in any company? Which company, sir? Okay, in IPO you got it. Oh, good, great. What was the issue price? 76. Today? Oh, it's increasing. Okay. So if he wants to sell the share without information to the Zomato, he can sell the share. How do I know that he is having the Zomato share? Now he told. In general, he won't tell. The class, if you are asking, he is telling. If he wants to sell, he cannot go and ask everyone, I have a Zomato share, can you please buy it? That's difficult. Not possible. Okay. He wants some platform wherein he can just come and list, I have Zomato share. Anybody wants to buy it. That's all. He will just give a message. That's over. Anybody responding to the message, he will buy it. That platform is called as stock exchanges. To get permission to go and give this message in the stock exchange, his company Zomato should have already got permission from that exchange. That's called listing. Listing. So can private limited company be a listed company? Not necessary, no. The need is not there. Because they are not allowing the members to sell the share, then there is no need for a market for them. Okay, that's called listed company. Now, listed company is having lot of procedures because so many members, so many public, the general public is involving in the company. I am sitting in Bangalore, I can own the share which is there, which the company is there in the Mumbai or in Delhi or in Pune or some other place of India. So government is bringing lot of rules and regulations in terms of accounting to make this worth trust among the people. Okay, so keep this in mind. We'll come back to the original point of accounting. So we are going to talk about accounting from the point of view of company, that too from the point of view of public company, that too in the point of view of listed companies. Clear? All listed companies are public companies, accept or not? Yes or no? All public companies are listed company. Not necessarily. Not necessarily. All unlisted companies are private companies. Not necessarily. That's a good answer always. Why, sir? Why not necessarily? Unlisted company can also be a public company. But all private companies are unlisted company. Compulsorily to be. That's the basic. Okay. Now, having understood this, we are going to talk about accounting for list from the, of course, all the business, same point of view, same principle, same logic. But when you come to presentation, when you come to exhibiting the statement, company law says something to be followed. One thing. Second one, this gentleman was touching about the SEBI, right? Somebody, SEBI, Securities and Exchange Board of India. What is it? It controls the stock exchange. It controls only stock exchange. Mutual fund also. Okay, then it controls only mutual fund and stock exchange. Comma something else. Yes. Which one? Financial instruments. Okay, it controls only these three. Single word. Single word. Sir, I am studying accounting for manager. I am studying marketing management. I am studying human resource management. I am studying production management. Instead of that, I am studying MBA. No. Currency. Then who is that gentleman? I mean, RBI is doing. What's RBI doing? What's the role of RBI? Of course, government is moving towards your point of view only. They want only one India, one language. One India, one ration. One India, one language. One India, something. I'm not talking about politics, just you're telling about that. I'm just touching upon that. There was a system. Only one financial regulator. They controls everything. We had long back when we were not developed this much. But today, experts are there. An expert is one who knows more and more about less and less. If you go to a doctor, sir, I have a pain in this shoulder. He's telling, I am a specialist in shoulder pain, but I'm not specialist in this shoulder. I'm specialist in right shoulder. You just go to the next room, 101. That kind of situation we are living in. Expert. Of course, everything is complex, everything is holistic only, but we have a specialist in that way. So SEBI is not controlling everything. There is a idea in India. We have a financial regulator, only one financial regulator. Even you take education, AICT is controlling one of the group of institutions, only technical education. Other universities are not coming under AICT, it is coming under UGC. Like that, we have specialization. So SEBI control, only single word, SEBI is a controller for, regulator for capital market. Capital market. RBI is a regulator for financial market. Then you have a confusion now, sir. What is financial market? What is capital market? Both are combined together. We call it as money market and capital market. Put together is financial market. Stock related things. The long-term instruments controlled by SEBI. Short-term instruments controlled by RBI. Treasury bill. Okay, promissory note. This kind of money supply in the country. Money supply in the country. Banks, NBFCs controlled by RBI. So SEBI is the regulating authority in India for controlling the capital market. Okay, this much is enough for the basic. Come back to the accounting now. Okay, now what is accounting? We touched upon something called profit, right? What is profit? Just now we told you what is profit. Income minus expenditure.
Minus expenditure.
Okay, in the full year, if I want to know what is my profit, I have to remember all my income, and also I have to remember all my expenditure. It is not possible. In today's world, there are so many transactions happening in the business. What do you mean by transaction? Sales is an example for transaction. Any other thing? Purchase. If you want to sell, I have to buy something. Purchase. Okay, then spending something. Salary, payment of salary, payment of rent. Okay, transaction. Anything? Sorry, sir. Very good. I think you already claimed that you are in accounting, right? So you're telling CapEx. Capital expenditure. Okay, thank you for touching that. Income minus expenditure is equal to profit. We are now into accounting. How this accounting helps us to find out the profit? One of the objectives of accounting is finding out the profit of the organization. Yeah, it is here. Profit of the organization. The result of the business. I written in the bracket, profit or loss. Result of the business. Financial performance of the business. Now, if I say business, it could be any of these three categories. It can be any of the 5 ownership. Generally, we are talking about. Okay. So business is expected to reveal profit, give profit. How much is profit? Accounting is helping us to identify, find out, locate. Okay. If you say profit is equal to income minus expenditure, I should know what is income and what is expenditure. Over a period of time, I should accumulate all the expenditure. I have to accumulate all the income. Then I have to take the differences. Comparing these two. Okay. Expenditure. Sir is touching upon a concept called capital expenditure. What is capital expenditure, sir? Okay. So buying any kind of asset which is going to be there with me for generating some kind of income. This furniture, what we are using now in the classroom, if you buy this for the university, that is called expenditure first. Primarily, it's an expenditure. 10 lakh rupees I spent on furniture to furnish my classroom. Okay. It's an expenditure basically, but this expenditure is not just expenditure. It is going to give the benefit for longer period of time. If any expenditure that lasting for the benefit of that is lasting for longer period of time, that expenditure is called capital expenditure. In modern ways, in style, you'll just call it as capex, CAPEX. That's all. Capital expenditure. Okay. Before you do that, you have to do a lot of analysis. Just 10 lakhs spending for furniture. Later, if I want to change the style of the furniture or something, then it is waste. You will study how do we take a decision the next semester in corporate finance about this. Now our job is, if the finance manager or CFO have taken the decision, how do we record it in the books of account? That's our job. Our job is little low level now. Okay, right. Then what is another expenditure? Payment of salary to a teacher. Is it expenditure or not? Expenditure. University is giving the salary to me, 1 lakh rupee in January 2021. Sorry, 22. It is expecting me to work for another 10 years. Possible? Not even for the next 10 days after 31st January. 10th day, if you see, okay, bye, sir. That's all. So that is called, in his terminology, is telling operating expenditure, but we'll come to that little later, but it is called revenue expenditure. All revenue expenditures are not operating expenditure, but all operating expenditures are revenue expenditure. So what is revenue expenditure, sir? To make the fixed asset to generate income, to make the fixed asset to generate income, to make the capital expenditure to reveal the income, to generate income, I need to spend something. That oil, what I am putting, that kind of extra what I am putting, that is called revenue expenditure. Payment of salary, purchase of raw material, electricity bill, okay, the operator salary. These are all revenue expenditure. If you say operating expenditure, of course, synonymously we can use most of the time, but operating expenditure means which are just connected to the process of that particular business. Payment of rent is a revenue expenditure, but it need not to be a operating expenditure. You have 5 rooms taken for rent, 5 courses you plan to operate, you plan to have, but only you got admission for 4 sections. 5th section admission is not done. So the 5th room is vacant, not used for any classes. But you are supposed to pay rent for that also. When you calculate operating profit, you can't minus that rent because that room is kept idle. So let us come to that little later in management accounting to study about the expenditure further. Okay, so now keep in mind, capital expenditure, revenue expenditure. When you talk about profit is equal to income minus expenditure, which expenditure you have to minus from income? Total expenditure, that means capex plus revenue expenditure? No. Simple example. You taken, yeah, portion of it. Very good. If you taken a particular building for 10 lakh rupees, 10 lakh rupees you spent for purchasing a building or a machine. If you minus this 10 lakh rupee from the total revenue of the company, sometimes it may be minus. Why? The 10 lakh rupee what you are spending on buying a machine or a building is going to be used for longer period of time. So you have to take such a portion of expenditure from the total expenditure of capex to charge from the income. You have to minus only that portion of capital expenditure and you have to add that with the revenue expenditure of the current year. Then you have to minus from the income to find out the profit. So this is first one. Next one, you see, to find out the financial position of the company. Another objective of the accounting is Financial position. So far, what we discussed is financial performance. Performance just like attending classes, okay, writing exam. Position means what you are today. Sir, he is having 100% attendance in all the subject. 95% mark is secured. Oh, that is great. What he is doing? Sir, he is not doing anything. He's in the home only. He's not getting any job. He's not doing any business. He's simply sitting in the home. So what is his position now? Monetary value. Of course, we have moral values. Beyond money, we are having so many things. Don't think that this money is only materialistic talking. Our subject is like that. If you allow me to talk on other side, philosophy will talk. That is later. That is different. Monetary value of that particular student is 0. We are not degrading anybody, but reality, position, economy, economic value of that person is 0. So position, what is your position now? How do you understand the position of a particular business? Net worth. Good. We already touched upon. We bring back that. Net worth. Total. The value of total asset of a business organization on a particular day minus liability. But my teacher told always asset is equal to liability. Any BCom student is here? Balance sheet. One side asset, one side liability. Both will be always equal, no? 5 minus 5 is equal to 10 minus 10 is equal to. So net worth of any business at any given point in time is equal to. You only told asset minus liability is equal to net worth. Okay, I taken that. You only told always asset should be equal to liability. X minus X is equal to 0 only, no? 10 minus 10 is equal to 0. So from this discussion, we can come to an inference that net worth of any business at any given point in time should be equal to 0. Why are you laughing then? So something is wrong. What is wrong? Asset minus liability is not equal to equity, first of all. 0 next. Is it so? You want to change your statement now? Okay, I have a disclaimer here. Whenever I use value, that is only monetary value. We are not referring to any other value. Yes, what is that? What is that value in the market? What do what do you mean? I'm just a slow learner. What is the value of market? What is value in the market? What do you mean by that? Yeah, it is doing something. That's why it's company. It's doing something. That's not out about it. But what do you really mean by value in the market? What do you mean by market? And what do you mean by value? And what do you mean by value in the market? If it is the value of the net worth of a company is 0, then what price will be there in the market? Who will decide that price in the market? Demand and supply. Who wants to buy? Suppose you want to sell, nobody is there to buy, then value will be less. At least we'll talk about less. Less, no. You are ready to sell your product. You have a piece of land nearby. You put a board. Last 3 years, board is there. Nobody is coming and seeing the board. So demand for the product is less. You already quoted 3 crores. Nobody is the taker. So you are going to come down from 3 crore to 2.9 lakhs. I mean, 2.9 crore like that. So demand is less, price is coming down. That's a normal known theory, right? Law of demand. Then what do you mean by value in the market? Performance. So good company, good performance, better value. Correlation. Yes, good. But our basic question is, what is net worth? Asset minus liability is equal to net worth, he told. For that, I told some kind of logic. You all accepted, then we ended up with 0. So how do we correct that? We'll come to this value just after 1 minute. This is altogether different from accounting. Yeah. Any correction from those who are online? Are you all listening to us? Anybody from online can tell one reply? What is net worth? How do you calculate net worth? Feeling sleepy, sir? No. We'll make you. Yes. Anybody? Okay. I take the gentleman's point. He is correct. He is correct with small one correction. That is, he told liability, right? True. When you say liability, he refers to external liability. If he is referring to external liability, then asset minus external liability can never be equal to 0. It can be some positive number. Asset is equal to liability. Liability we have two. One is internal liability, external liability. If you take asset minus only external liability, that should be equal to internal liability. That internal liability only we call it as net worth. Net worth or equity. I'm introducing a concept here, equity. Yeah, I'll tell you. First, we'll understand the concept. By taking an example, I'll come to you. Okay, since you told, then you'll tell, sorry, it's not telling you. Okay, fine. Okay, you are starting a business. Today you are starting a business by bringing 10 lakh rupees from your family, from your domestic asset. 10 lakhs, you brought it and you kept it on the table. 10 lakh, you declared that I'm starting a business by investing 10 lakh. What is this 10 lakh called in accounting? Capital. All of you accepting? Capital. The other word for capital is equity. This is not a borrowed capital. What's your name, gentlemen? Reddy and Company is the business name. He invested how much? Who has invested? Mr. Reddy has invested. That's all. 10 lakh. His business, sole proprietorship. Now, Reddy is different from Reddy and Company. Please understand, that's a concept of business entity or separate entity concept. For accounting, business is separate from businessman. We have to treat always like that. Now, tomorrow morning, Reddy is coming and taking 1,000 rupees from the accountant. Poor accountant definitely should honor because it is his business. He will give. But Reddy cannot tell him, don't write it in the books of accounts. If he is telling that, if he is obeying, then finally he has to pay 1,000 rupees from his own. He is asking later days, I have given you 1 lakh rupee or 10 lakh rupee, where is 1,000 rupees missing? Then he is answerable. So business is different from businessman. Anything between business and businessman, financial relationship should be recorded. Okay, come back to the example. He has invested 10 lakh rupee. Okay, correct me. I will say 10 lakh, 1 lakh, 5 lakh, something. We'll stick on one thing, 10 lakh. He brought it. Now, what is there in the business? Cash is there. Capital is another word for not the cash. The relationship between him and business is called capital. But really, what is there in the business today? Hot cash, 10 lakh is there. Now we come to the equation. Asset is equal to internal liability plus. That's what we decided. Okay. Now, what is asset here in the business? Cash. Cash is equal to 10 lakh. Cash, 10 lakh. Then what is the other side in the equation? What is the other side in the equation? I'll take you to the equation so that you can easily understand. This slide is for the regular class we'll teach for hours together. No, that's why it is there like that. Don't worry. We take the essence of that. Essence of that. Yeah. Now look at this equation. I think you are able to see this online, people. Yes. What do you mean by resources? Resources of business now how much? That too in the name in the form of resources. That is equal to what is claim here? Whose claim it is? The owner's claim. The owner's claim. Here, owner being Mr. Reddy. That's it. Okay, owner's claim, 10 lakh rupee. Tomorrow, the very next day, you are depositing 20,000 rupees in HDFC Bank to open a bank account. Because Government of India is saying, don't spend money, we are not able to print currency. You just transact over numbers. You write whatever you want in your bank account number, keep it with you. We'll also write whatever you want in the bank account, we'll keep it with you. We don't want to print any. Days are not far. RBI will stop the printing of currency. Okay. Come back to the bank account. We are opening a bank account by depositing how much? A real businessman. With 10 lakh rupees, he's opening a bank account of 20 lakhs. That will take some time. You have to understand the business tricks. then you can open a bank account with 20 lakhs. I told you, no, just only number, no. Today, only transfer of numbers is of 20,000, one more zero, you add it, two more zero, 20 lakhs. Okay, fine. So you're opening a bank account by depositing 20,000. Now, what is the equation now? What is the resource? Same total of resources, but the resources have been split. 9,80,000 cash plus bank account 20,000. That is equal to 10 lakh. That is equal to claim. Claim. What is the claim? The owner's claim. Okay. The next day, you are buying a building. You are buying a building by spending all the cash. 9,80,000. You spent all the cash. Or take an example, 9 lakh you spent. Now, what is the change in the equation? The rights, the left side, to me, the left side remains the same. The claim remains the same. That is equal to 10 lakhs. But my right side, the resources of the company, the total value remains the same. But internally, there is a change. What's the change now? Cash in hand, 80,000. Cash at the bank, 20,000. Building account, building. Everything is asset only. Cash also asset, bank also asset, building also asset. We are telling the each name. Bank, building is equal to 9 lakhs. Now you are seeing that only 80,000 is there. How do you do a business now? Difficult. You want to buy some material. Building is ready, bank account is ready, is ready. But now material, then only we can find a customer to sell it. You are going to borrow money, buy material. You are approaching a supplier. He is telling, okay, sir, you are a new businessman. We appreciate that you are doing a business. Yes, buy from us. Then you are telling, sir, I have only 80,000 rupees. With this, how can I buy? Don't worry, we are there to give you material. Sell it later. Don't forget to settle us. Okay. We are getting 5 lakh worth of material. 5 lakh worth of material from the supplier. You understand? Supplier, 5 lakh worth. Now, the transaction is buying material from supplier, 5 lakh rupees on promise, on credit. In accounting, we'll say on credit. Engineers, credit and debit comes into picture now. Don't run away from here. Simple, it's nothing, plus minus. Mathematically, it's not exactly, but just for your understanding, blind understanding, keep it right now. Plus minus. No. Don't take me away from the subject. Then I will give a lecture on the debit card and credit card for 2-3 minutes, and we'll last in the main aspect. Come back. That is different from what we are talking about. Okay. So on credit means on promise. I told you that I'll give you money after 2 months or 1 month. Now, what is the equation? How the equation changes now? The resource is how much? Already, how much was the resource? How the resource is now? 15 lakhs. The resources increased by, because which is the resource increased now? Goods, material, merchandise. Okay, something you bought, X or Y, you bought it. So cash, 80,000, building 9 lakhs, bank account 20,000, material 5 lakhs. Total is equal to, that is in this side, right? Asset side, right? Now, other side, opposite side. The claim, how much it is? 15 lakhs. Why it is 15 lakhs? 10 lakh is the claim payable to whom? Owner. 10 lakhs, owner, original amount. Further 5 lakhs is the claim payable to the supplier. Simple term, general term, supplier. The supplier, all are student, but you are student of Dayanand Sagar University, like that. All are supplier. Now the supplier is your, what's another name you use now? Creditor. You bought it on credit. One who has given you on credit is called, who is creditor now? Creditor is a person or entity to whom we have to pay money. We owe money. We owe some value of money. In future, you have to settle it. There are 2 types of creditors. Now, this gentleman or this company who has given you goods on credit is called as trade creditors. Trade creditors. Tomorrow, you are going to a bank and asking some loan. sir, give me some loan. I thought of doing a business with 10 lakh rupee, but I ended up today itself borrowing goods on, taking goods on credit. So why don't you grant me some loan? The bank is giving you some 5 lakhs loan. They are called as creditor again, but they are called as financial creditor. One who has given money is called financial creditor. One who is giving you goods as a trade custom, they are called as trade creditors. Okay, now tell me the final equation after borrowing 5 lakh rupees from the bank. What is the equation now? Tell the individual item, asset side. Cash 80,000 plus bank account 20,000 plus building 9 lakh
9 lakhs,
plus goods 5 lakhs
5
plus
lakhs, 5 lakhs bank.
where that will go. That 5 lakh where it is. One second. Don't confuse. That 5 lakh is first coming to you. Each and every transaction should be looked into two aspects. One is what you are receiving. Another one is what the claim you are making. Look at this equation. This side resource will increase. At the same time, claim will increase. Okay, always. If you get some resources, definitely there should be a claim for that resource. Because business does not own anything. Business is made to own something with the grant of somebody. Reddy was the first grantor by giving 10 lakhs. Next one, the trade creditor has given 5 more lakhs. Now the bank is giving 5 more lakhs. Now where these 5 more lakhs will go? The bank is giving you money. So where you taken into account in the equation? Sorry?
Claims.
Sir, don't tell again liability. See, please understand. One second. Let me clarify it. If you increase your claim, liability you are telling, of course it is increasing. If liability is increasing, definitely there should be increase in resources, right? Where that resource gone? What is called as bank account. So bank account should be not 20,000. Bank account should be 5,20,000. We assume that bank has credited in your account. It has not given any hard cash. So come again with the equation. Cash at the bank 5,20,000, cash in hand 80,000, building 9 lakhs, and then stock 5,000. Sorry, 5 lakhs.
5 lakhs.
5 lakhs. Come to the other side. Claim. What's the claim now? What are the different items are there in the claim? Bank loan 5 lakhs, sundry creditor 5 lakhs, capital 10 lakhs.
10 lakhs.
10 lakhs. Capital 10 lakhs. Total is equal to, it goes on like this. This is what we call it as financial position of the company. Only, not sundry, I did not tell sundry credit. Trade creditors I told. But both are same. Why it is sundry creditor? Simple. Now we bought some goods from Roy and company. Tomorrow we may go and buy some goods from Abdullah and company. Day after tomorrow we go and buy something from Rajesh and company. All these are called as creditors for us, trade creditors. We can't write in the book in a summary. Detail you will write it. In a summary, what you will write it? Sundry creditors. Meaning all trade creditors put together. Sundry creditors. Okay. Okay, fine. Let us see one by one later. Now understand, this is the financial position of the company. Any doubt up to this? Is it accounting easy? A is equal to B plus C. C is equal to 5 is equal to 3 plus 2. 2 is equal to, you are telling 5 plus 3. 5 plus 3. That's what we told now so far. But A, B, C are nothing but equity, liability, and asset. Now come back to the net worth of the business. Net worth. Now you tell me in the last stage, what is the net worth of our business? Reddy and company. How it is 20 lakhs? Net worth. That's what I'm asking. Net worth. Net worth is 10 lakh. How did you find out? The value of total asset, how much? 20 lakhs. Minus external liability. In this equation, I just written liability because I nearby written equity. So this liability refers only external liability. So external liability, how much in the business? 5 plus 5. 5 is to the Goods, 5 is for the bank. So remaining 10 is whose money? Owner's money.
Owners.
Yeah. Book value of owner's claim in the business is called as net worth. Book value of owner's claim. Now, after some days, you are going to wind up this business. You are going to close your building. You cannot sell for 10 lakhs, sorry, 9 lakhs, or you may sell it for more than 9, or you may sell it for less than 9. That is called market value. So the claim at the last may be more than the net worth, or okay. Now we'll come to this market value since you touched upon. Market value is nothing but the share price of the company in the market. Net worth is not having anything to do with the market. We as an accountant, we as a student of accounting or learner of accounting will never worry about what is there in the. Suppose LIC is coming tomorrow with IPO. LIC. Okay, LIC is collecting money. How that is going to be affecting the LIC? Already somebody is owner of LIC. That owner is selling LIC. Who is that owner? Who is the owner of LIC? Government of India. Government. They are having 100% stake in the company. The stake of the government is going to be diluted 5% or 10%. That's the range they are fixing. Okay, this will affect LIC's books of account. Government will take the money in the place of government's money. Our money goes there. Is LIC a public company or not? It's a government company. Public sector, somebody was telling a public sector company. Now it is going to be a public limited company and listed. All public sector company need not to be a public company. Public sector means government is having a more stake, controlling stake in that company. State Bank of India is a example for public sector company as well as a public limited company, and also it's a listed company. Okay, Reliance Industry Limited is a example for listed company, public limited company, but it is not a public sector, it is a private sector company. So that understanding you got. Now come back to this equation. So this is fine, no? This equation is okay? Okay, so suppose he is selling the Zomato's there, share tomorrow. Will it affect the company? It will never affect. Who is going to buy? Somebody is going to buy X or Y. They are giving the money to him. He is getting the money. Company is just keeping quiet unless otherwise the buyer of the Zomato company from him is informing them, sir, I bought this many shares from so-and-so person. Please delete his name in the register, include my name in the members register. That only will be done by the company. Monetary wise, there is no impact on the company. Secondary market. LIC is coming into primary market, that will affect the books of accounts. So these are all the four objectives of accounting. One is recording the business transactions, to know the result of the business and to know the financial position of the business. And last one is to make the information available to all the people. Who are all those people to whom this information to be available? I don't know where it is. Yeah. To whom? There are two people. One is internal and another one is external people. Who are they? Owner of the company, okay. Then management, just saw that. Okay, no problem. He managed. Okay, no problem. Okay, management. Then who is owner and who is shareholder? Are they different from each other? No, you already told owner, no, then why are you telling shareholder? Shareholder is the form of owner in the name of company. Owner means it's collective. Partner is also owner, proprietor is also owner, member also owner, shareholder also owner. So in common, accounting information is more interested by owners. It could be a shareholder or anybody. Okay, next, management. These are all people internal. Okay, owners, management, and employees of the company. These people are interested in knowing about the financial data, financial information. What you are doing? Yeah, I'm doing like this. Okay, fine. I wanted to be in your company. Okay, you are doing not good. So I will exit from your company. I'll sell my share and I'll say, okay, thank you. That's all. Okay. So employees, why employees are interested in your financial data? You may tell them this year we are doing very bad because of you people not working in the company. We are getting loss, so we are not increasing anything. Normal HR manager's statement, right? I'm sorry if any HR people are here. Okay, just a colloquial term we are using now. Our college told we maintaining the status quo. That means X is your salary means X continues due to some pandemic. But admission is increasing, school fees is increasing, everything is increasing. Okay, fine. If that is the case, we say salary. Then we say, sir, your sales last year 1 lakh, current year it is 1.5 lakhs. Then he will say, last year per unit is 1 rupee, this year per unit is 1.5 rupee, cost is increased, so we increase the selling price, quantity remains. Then you have to find some other support for us and we have to argue. So for that reason, employees are interested in knowing about your performance of the company, your data of financial nature. Then last one is management. Their performance, right? Board of directors, CEO, CFO, COO, all these people, key managerial personnel, KMP. They need to claim something for their salary or their performance itself is under stake, right? They have to tell, this is what I performed. When I took the business, this position, the net worth of the company is 5 crore. Now I made it to be 10 crore. So I achieved. Market value in the share value. The Reliance will always do that. Share price is purely independent of company influence. Performance only can decide the share price. I am not having any role to go and play the market, demand and supply. But this Reliance company, what they will do now? They will just interfere in the market operations also. The brokers are there now. The valuers, brokers. Now LIC, it's a government company. And also it's a monopoly so far in many years, up to 1993 and all. Now only small private players are there in the insurance business, life insurance business. Still their market share is more than the 50%. Okay. So the valuers will play some role in deciding the IPO price. So that time these companies, private companies, especially Reliance, they will do some kind of support to the valuers. I will take care of you, you take care of my company's valuation. Done. Higher overvaluation. So Zomato, how much you bought it? 76 rupees. Now it is 79. How many months over? 3 months over. So it's not great difference. 73, 76, and 79. I think Reliance Power or Reliance Energy, one company long back, it has been oversubscribed by 72 times. 1,000 share they are bringing in the market. 72,000 share application there. Oversubscription. That means 100 sheets are there for MBA, 1,000 applications are coming. So definitely that course should be of premium in nature. But after coming to the class, people are thinking that, okay, this is also one of the other one. Then you lose in your price, what you paid is not worth, right? So what the point I'm trying to say, valuation. These people will interfere in the valuation. They will create some kind of hype in the market. Okay, so that is different one. The performance of the management should be known from the company's profit increasing. Okay, how much dividend you paid out of your profit, how much development you took for the company. Payment of dividend is one aspect, but always payment of dividend is good or not. But theory says payment of dividend is not good. Which company will pay dividend? Making profit. No, profit or good profit. What is good profit? Profit. Adjective is not having any value there. Profit. Okay. 10 rupees there, profit. I'll give dividend among the 10 rupees, within 10 rupees. Okay. Is payment of dividend is good? Somebody is telling yes, but I'm telling no. Theory says no. Theory says no. Why? Any logic you can understand? There is no growth for the company. That is why they are giving the dividend to you. Payment of dividend is not compulsory in law. Please understand. Distribution of profit in the name of dividend to the shareholder is not obligation. It's purely optional. The board decides, the shareholder decides. Of course, it's all of us deciding whether to take the profit or keep the profit in the company itself. When we will keep the profit in the company? Sir? When it is growing. If you are not keeping, you are giving means what is the meaning? What is the signal you are giving to the market? I'm not growing. I'm not expanding. Okay, keep that for your thinking. Next semester, you will just further, you can go on. Okay, in financial management. Okay, now external users. First one is creditors. Second one is financier. Both are together. Both are similar. Financier is money giver. Trade creditor is supplier of your goods. They are interested in knowing about your financial position and company's profit and loss. Potential investor. I wanted to invest. I have some money. I want some good companies. I want to see you. Then give your financial data. I want to see. Okay. Next, consumers. If too much profit you are reporting in your financial statement, they will doubt on you. Okay, I am getting exploited, right? Correct? No. Too much profit a company, return on investment. Somebody told return on investment. 200% is there. As a true consumer, I should not go to that company. Meaning that company is overpricing the product. So that kind of understanding can come to the consumer by looking at the financial statement. Tax authorities, of course, we are blessed or we are cursed. We are in this particular environment. Okay, that too, poor people like salaried, so-called salaried, will not pay tax. Will not pay tax. They are getting their salary after tax. That is one thing. But here it is. I think you are all sailing in the same boat, right? So that is our problem. We expected the honorable, respected madam, but madam this time also disappointed all of us. Okay, in so many interviews, people are also asking, but there is no reply. 7 years over, I think 7-8 years over, the limit has been increased. Of course, the former regime was better in this particular respect. Okay, let us not. Yeah, tax authorities will be worried about your financial books of accounts because they want to collect the tax, not only income tax, but also so many the indirect taxes. Okay, of course, the GST. Okay, today's GST and some of the places excise and sales still there. Okay, government. So government is the business of government is not to do business. That is the present environment, right? Selling of Air India and selling of all these things. Okay, that shows that business of government is not to do business. Their business is only to do governing of businesses. So in that governing, they are very much particular about all these transactions happening in the companies. What are you doing? How much you are in profit? Colloquially, the people will tell. The profit is 10%. Profit, net profit. Some gentleman was referring to the last beginning, right? Net profit, final take of the owner is 10%. But all the tax put together is 40%. So you own the business, give the tax to me. The colloquially, some people are talking in the social media or in the meetings, some of the politicians. But that is true. So government wants to see what is happening in the country without any trouble, without any problem. Let us smoothly conduct the business activities. For that, government is also interested in knowing about our financial data. Okay. Last, people like you and me. Okay, I may give you some assignment, calculate the financial. So you'll go on to Google it, which company it is. You'll take the financial data and you'll be doing some ratios and some kind of analysis. For that also, people are interested, research scholars, people, student, academicians like that. So these are all the different users of financial information. I already told you 3 branches of accounting: cost accounting, management accounting, and financial accounting. Financial accounting tries to record and find out the financial position and the financial performance. Management accounting analyzes the financial data generated from the financial accounting. Cost accounting helps us in understanding the cost of the product as well as control over the cost. Okay, this we don't want to. Limitation means only one point I'll tell you. Financial accounting touches upon the material aspect. I mean, the economic value, the monetary value, honesty, loyalty, all those kind of non-monetary things are ignored. Time value of money is ignored. There are so many limitations are there. This watch works correctly. I mean, another 2 minutes. We'll take a break. Then we can reassemble. Okay. Look at this particular slide. This is international accounting, international financial reporting standards. We have principles of accounting. We'll discuss after the break. Along with the principle, we have something called the guidelines issued by the government to make a uniformity in reporting. Reporting, see, we are finding out the profit or loss, we are finding out the financial position. But while doing so, we need to follow certain guidelines that is already there in the accounting, principles of accounting. We'll see little later after the break. But that gives some kind of ambiguity, some kind of judgment to the accountant. I take one position, my fellow accountant in another business organization is taking some other stand. All are having the same IPC, all lawyers, same IPC. In the same case, one is defendant for a counsel, another one is opponent. Both are knowing the same law. Constitution is same for both of them, IPC is same for the both of them. But they take two different stand. Similarly, in accounting also, the principles of accounting is there. Everybody studied the same principle. The Bible of accounting, that's same. But when you are applying your own judgment and you are coming to some kind of treatment of some items. Another person is not treating the same way in which you are treated. If that is the case, there is a difference in the result. If I compare the result of two business organizations, decide which organization is good to invest, I'm confused. If same logic is followed for ABC, all the companies, then comparison is logical one. Otherwise, it becomes illogical. Okay, not good comparison. So to make the uniformity across the world in keeping of books of accounts, in reporting, especially reporting of the statement, we have this standard called International Financial Reporting Standard. In India, we taken this, and we just modified according to our situation. That is called IND-AS. IND-AS, Indian Accounting Standard, converged with International Reporting Standard. Okay, most of you working in accounting department, you are following IFRS only. IFRS, we already moved to IFRS, but it's in the name of IND-AS, converged. We are not just blindly following it. Some countries are just taking it and adopting it. We are not just adopting it, we are converging with our own existing accounting standard. In India, we have a board called Institute of Chartered Accountant of India. They are the accounting professional body in India. They have accounting board that will set the accounting standard for Indian companies. All the companies need not to follow all the standards. There are some exemptions. The basic crux, the basic point is people should not get affected by wrong reporting. That's all. So depending upon the nature of the company, the imposition of the standard will be there. Some company may be exempted because their existence is only within a closed group. So that time they may be exempted. Okay. So you understand basically there are principles which guide the accounting procedure. In addition to that, we have GAP, generally accounted accounting principles. In addition to that, the next level is accounting standard of that particular country. Each and every country will have its own accounting standard. That also was a confusion because the borders are only just man-made. We are already investing in so many other countries. And other country people are investing in our own stock market. That open up already we have done. So for that reason, comparison is very much important. So to make the logical comparison, we introduced the international accounting standards. That's called IFRS. Okay, with this, we can stop for 10 minutes. We can take a break, then we can come back. We'll discuss the further. Okay, thank you. If any messages on the chat box, I'll answer after the break. Thank you. It is there in the LMS already. Am I audible to those who are online?
No. Yes, sir.
Okay, thank you. So by this time, you should be knowing what is accounting. So that slide is here, you can see. Accounting refers to the process of identifying the business transaction, recording those business transactions in order to find out the result of the business as well as the financial position of the business, both together called as financial report. Okay. And before doing that or while doing that, we are summarizing the business transactions, okay, and classifying the business transactions. So this is all what is accounting. Okay. Same thing given in different sentence. Definition of accounting. So basically, it's art of recording, classifying, summarizing the business transactions in order to know the result of the business and the financial position of the business, and also interpreting the results to the parties those are interested. Okay. Bookkeeping is nothing but just a recording of books of accounts. Okay. I don't think I already told you, if you're a BCom student, it's only again what you studied is just refreshed. That's all. You might have forgotten, or you may say that your friend is very basic, just basic only, very basic, but you have to be strong in the basics. Okay. Accountancy means it's a broader discipline that gives the framework of accounting. It propounds the principles, rules, the various framework of accounting. Okay, that's accountancy we'll call. This is studied process, nothing but the various stages involved in the accounting. Okay. This is already studied. Now we have to talk about the principles of accounting, concepts and conventions, which guides the accounting discipline. Yeah, this one. Okay, the basic concepts. IFRS, Ind AS, and GAAP, all those things are guidelines for uniformity, uniform reporting. But this is the base of accounting itself. Based on this only, accounting discipline is developed. Accounting is developed.
అందుకే నిన్ను ఎవరు పిలుచుకోండి
So much difficulty people are attending the classes. Madam, it happens sometimes, but it should not happen all the time. Yeah. Okay. They muted us. Yes, yes. Okay. Sometime it happens. Fine. So the first concept is business entity concept. I already told you business is separate from businessman. Some man is missing here. Somebody was here. No. No. Okay. 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 I thought accounting was that effective. Okay, slowly it will be right. So business entity concept, we have to treat the business is separate from businessman. Whenever businessman brings any value to the business and it takes any value from the business, both need to be recorded. That's the point you have to understand in this concept called business entity concept. Okay, the money taken by the owner from the business or the value taken by the owner from the business in terms of goods or service, all are put together called as drawings. It is possible only in the partnership and sole proprietorship. Company form of organization, it is not possible. You may be a owner of Reliance Industries Limited. Okay, you cannot go to Reliance Industries Limited and take some goods and tell that I am also owner of this company. No, not possible. You may be a shareholder in HDFC Bank. Okay, you can't go to the bank and tell that I am also one of the owners. Okay, sir, no problem. Now you are coming to the bank only as a deposit holder. That's all, customer. Okay, so that right is not there to take some value from the business in terms of company form of organization. But in sole trading, it is possible. Partnership, it is possible. That is recorded as drawings. Drawings. Don't confuse withdraw money from a bank and drawings of a personal account in the business. Drawing is nothing but the money or the value taken by the owner from the business. Okay. So that is the concept of business entities. And going concern, we assume the business is always going on. Business is started not for closing it. The intention of the business may be closed, but the intention of starting a business is not to close. Why this concept is there in accounting? If I give you money, you are going to return back later on. I believe you that you are going to be there. Your business is going to be there for future also. Going concern concept. Okay, the indebtedness is recorded. That's why this is called going concern. Accrual concept. What is accrual in accountant? I mean, any BCom student, accrual. What is accrual? What's the English meaning of accrual? Interest accrual. Okay. Revision of expenses. What is accrual? Suppose I deposit money in the bank, in the fixed deposit on January 1st, 1 lakh rupee, agreeing to interest of 12,000 rupees per annum. Okay. Bank is going to give me interest once in 6 months. So when I get the first interest, June 30th or 1st July. Okay. But I'm closing my books of accounts on 31st March. What do you mean by closing books of accounts? Every day you will not close, you'll keep it open. What does it mean? I'm taking the stock of the things on that particular day, 31st March. I calculate the profit of the company. I find out the financial position of the company on that particular day. So that is 31st March. On 31st March, in this example, did you receive any interest? No. But it does not mean that you did not earn any interest. How much interest you earned on that particular day? How much interest? 3,000 you earned. 3 months, 3,000 rupees you earned. So this need to be brought into books of accounts in the name of interest receivable. Under income category, you will be having one concept called interest. That includes interest actually received plus interest pertaining to this particular accounting year, but not yet received. Yeah. So the interest of this period need to be brought into account of income of this company. Then only we can find out the real profit of the company. So this concept is called accrual. Income earned but not received. It's not due. Because of the custom, because of the rule, I did not receive it, but I have earned it. Okay, so that is called, that need to be taken into consideration because of this principle called accrual concept. Next is money measurement. This is what we are talking about from the beginning. Anything that can be measurable in terms of money can alone be recorded in the books of accounts. Nothing cannot be recorded. Okay. Next, cost, dual aspect concept. Each and every transaction has its own twofold effect. One is benefit giving, another one is benefit receiving. Loan taken from the bank. What is the benefit received? Cash. What is the benefit giving? I have given a promise that after 5 years I will settle this. So one side, resource is increasing, another side, claim is increasing. If I say asset, you say liability. If I say claim, you say resource. The words. That is increasing. That is because of dual aspect concept. Few years ago, I think same in our college only. I was telling, so loan taken from a bank. When I go to journal entry, we will make some journal. That time, 2 times I will write 10 lakh rupees. Those are knowing, loan taken from a bank. The journal entry is bank account debit to bank loan account. In bank balance is increasing. Bank loan is increasing. So gentleman asking me, sir, you took how much loan? 10 lakhs. Then why are you writing 2 times 10 lakhs? Journal entry. Goods purchased entry. Purchase account debit to cash account. 10,000, 10,000. He's asking me, sir, how much goods he purchased? I purchased for 10,000. Then why are you writing 2 times? He's right in his own point. But it is because of dual aspect concept. It's only one time purchase, only 10,000 only. But it is having a two side effect equation. One side claim is increasing, another side resource is increasing. Or one side resource is coming down, claim is also coming down. So each and every transaction will have twofold effect into it. Both the aspects are recorded in the books of accounts. If you are doing so, that is called dual aspect concept. And that method of doing is called a double entry bookkeeping system. Double entry. Next one is cost concept. How much you really spent, that much need to be recorded in the books of accounts. You are getting an employee. He's very good, fully qualified, dedicated, but you are giving him a less salary. Normally they will do, no? 1 lakh rupee you fixed it, but he's really worth for 1.5. But you are happy that I got an employee who is worth of, but I am paying only 1 lakh. Now salary paid first month. How much you write in the books of accounts? 1 or 1.5? 1 only. You bought a land, nearby land, a piece of land, which is worth of 1 crore. But you got it for a good deal. Only 75 lakhs you got it. But market value of the land is 1 crore. How much you write in the books of accounts? You paid 1 lakh, but the real asset, the value of the asset is 1.2 lakhs. That time also you have to write only. So how much it cost you, how much it is costing you, that much need to be recorded in the books of account, not the market value or intrinsic value or any other value. Okay. Next one is accounting period concept. Just now we discussed. We cannot teach, go on teaching you. We have to stop somewhere and we have to check whether you understood or not. Similarly, we can't keep on recording the transactions all over. All together the years. Let's just stop. So 1 year, 12 months is included in the accounting period. 3 months once they may be publishing you the quarterly statement, unaudited quarterly statement. But 1 year once we are auditing it and they're publishing it. What is the result of the business? Okay. Next, it's called accounting period concept. So more than this, we have to compare the income and expenditure only for the 12 months. Whether you receive it or not, no matter. Whether you have a contract, that matters. Next year, I may be realizing the money from the customer. But this year itself, I have sold it, the contract is done. So this year profit, I have to add that sales in this income. Okay. Similarly for expenditure also. Next one is matching concept. You have to compare the revenue expenditure with the revenue income. Capital receipt, capital payment is there. Revenue receipt and revenue payments are there. Just now, before break, we discussed about the capex. Similarly, in the receipt also, expenditure is payment, right? In the receipt also, we have two: capital receipt, revenue receipt. What is capital receipt and what is revenue receipt? Sales done and you are receiving money from the customer. That is called revenue receipt. The owner is bringing money. In our example, Reddy brought 10 lakh rupee. That is capital receipt. So 10 lakh I received, minus 2 lakh I spent, 8 lakh is profit. Then that is not good. That's not right. 10 lakh is liability actually, internal liability. It's a capital receipt. You are borrowing money from bank, money comes in. You cannot treat that as a income. What is that? That's a liability actually. Capital receipts are all liabilities. Okay, so that concept is called matching concept. You have to match, you have to compare the revenue expenditure with the revenue income to find out the next realization concept. Once you realize the income, only you have to record it in the books of accounts. So tomorrow morning, my friend is going to come and buy this much of commodity. Okay, they are welcoming, but we don't make any entry in the books of accounts unless otherwise he is signing the invoice. Okay, that's called realization concept. Anticipating some income, we don't write it. Only when it is realized. Realized means not in the form of cash, but in the form of contract. Legally, he is bound that he is going to pay the money. Next, objective evidence. What is this objective evidence? Can you understand me? Evidence. Each and everything what you are writing in the books of accounts should be supported by documentary evidence. Something called what you can say, invoice, voucher, receipt, any other such matters. Bill of exchange, promissory note, bond, share certificate. All these are evidences. Okay. So any transaction which is not having any objective evidence is not possible to be written in the books of accounts. Look at this side. To support these concepts, we have some conventions also. Over a period of time, we develop some custom. We develop some practice that becomes convention of accounting. Accounting convention. First one is the convention of disclosure. We have to disclose the accounting policies to the stakeholder or the readers of accounting information. We discussed previous class, internal users. Those people should be aware of what's happening in the company about accounting policy. Okay. Next one, disclosing the material facts. Convention of materiality. What is materiality? Material means what? Material. Important. Here the meaning is important. Disclosing, first one. What to disclose? Policy. Okay. Important material facts should be disclosed to the stakeholder. knowing of this particular fact or not knowing of this particular fact is influencing my decision making of investing in the company or dealing with the company. So such fact is called as material fact that need to be disclosed in the accounting statement itself. In the footnote or policy, you have to disclose. Next one is consistency. You have to be consistent in your accounting policy. You can't keep on changing. So yesterday I joined in MBA. After accounting class, I just felt that okay, this is not my area. I want to join in some other course, MSW, Master of Social Work. Then after one class, you're deciding, I can work, but the society is not good. So Master of Social Work is not good. I'm going to MCA. Then after that, keep on changing. Year will go on, but you'll be in the first year only. Okay, so that is a problem. Consistency is important, right? Consistency. Consistency. If I select, okay, sir, I decided to be following this depreciation by taking the straight line method, at least for some number of years. You have to give some time, no? Today, Chief Minister selected. Third day, if we go and ask what change you brought, no change, I brought nothing. After 5 years, if I go and ask, okay, there's a meaning, but consistency is matter. But you are having all the right to change. Nobody stops you. It's your company. Within the framework of the law, you can change your policy. Accounting policy can be changed. Each and every company will have its own accounting policy within the broader framework of the country. Okay, but if you do so, there should be a strong need, demand. Unless otherwise there is a demand for that, you should not change. If you change, you have to think and change it, but you have to continue for that change for at least some number of years. What is that? At least some that you have to decide. Okay, otherwise it creates confusion. I don't know about your policy of this year. I might be keeping that. Suppose internal mark is how much? 60. How do you know it? They told you. Okay. So this message will pass on to your juniors also. You'll become senior. You'll pass on this one to your junior. If they miss the orientation class, in the orientation class they told internal mark is 75 or internal mark is 100. Each gentleman will be thinking 40 mark anyway I have. I'll write the exam good and get the mark. Internal I will miss it. Then finally you will not be knowing about policy. But we have, liberty to change it. But that need to be communicated one thing. But at the same time, that should be continue for some number of years. Accounting policy. Otherwise, confusion, depreciation. We talked about in the previous break, no? The 1 lakh rupee of asset value, 10,000 we are taking for portion capex, the portion of the capex. That is straight line method. Every year 10,000. 10 years, the life of the asset. Total value of the asset is 1 lakh. So proportionately it is 10,000 per annum. Next year we are telling, sir, it is not a good method. I will go for another method. Then diminishing balance method is there. What is the value of the asset after 1 year? If you charge depreciation of 10,000, what is depreciation? The value of revenue cost of that particular capex is for that year is called depreciation technically. What is the value of that asset after 1 year? 90,000. 1 minus 10, 90,000. So immediately I'm deciding, sir, year after I don't cost 10,000, I'll charge only 10% of book value. What is book value? Depreciated value, diminished value, 9,000. Then again, third year, no, sir, it is not good. I'll go for the base method. That create confusion. So that kind of should not be there. That's called consistency. Then conservatism. What is conservatism? Colloquial, dictionary meaning of conservatism. He is more conservative. What does it mean? Restrictions. So much of rigid restriction. Okay. Yes, sir?
Fundamental or traditional.
Fundamentals. Yes. Fundamentalism. Yes. What does it mean here? Okay, that's real dictionary meaning of following the same old method. Yeah, but all these things put together, this is the point. What is that, sir? Safer, sir. Why I follow? Why I am too rigid? Why I am to be following the traditional method? I want to be safe. What is safe here? Don't foresee the income, but foresee the losses. What I mean by foreseeing? Don't estimate the future income that you are going to get it, but estimate the loss which you are going to probably get it in the future. Meaning, for example, there is a case pending against your company asking for a compensation of 10 lakh rupee by a workman. He was just met with an accident in your company, cut his hand. Okay, lost his hand. You are giving only 1 lakh. Okay, right hand, 4 fingers are missed, 1 finger is still there. 1 lakh rupee, take it. That's what Workman Compensation Act says. I'm not telling anything. Workman Compensation Act. What is the thumb finger of right hand? What is the value of thumb finger of left hand? Is not there. Any HR professional? Okay, it is like that. You given 1 lakh rupee, but that fellow is asking, no, sir, I can't work further. I met with an accident. You have to give me 10 lakh. Okay, you are telling him this is the value, but he is going to court of law. Now the court may decide either in your favor or in his favor. If it is decided in his favor, you have to give 10 lakh rupees. It may be in his grandson's period or it may be in that grandson's period. Maybe depending upon the counsel whom we are taking and how we are taking. Of course, court procedures are good enough. But anyway, we have to give if it is decided, or we can go to the next level to appeal. So this year, 2020, it is happening. 23 maybe verdict may come. So I have to make that provision now itself. Provision for workman compensation. But in other case, you are having some land near to near to Attipalli. After 10 years, it may be for 100 crores. Today you bought it for 1 crore. Sir, another 10 years, I will receive 100 crores. I will make some account in the books.
Sir, we lost you. We are not able to hear you.
I'm sorry.
Your voice has become feeble, sir.
Now?
Yeah, it is better now. Thank you.
Okay, so the realization, the value what are you going to get in the future need not to be recorded now itself. Let it come. That time you can record it. But if the loss is going to come, may or may not also, we have to keep some provision. We have to ready to get the shock. But happiness also will give you some shock, but that is okay. If you announce to your shareholder, this year our land value has been increased by 10 times. We bought it 1 crore, now it is 10 crore. They will be happy. Shock only, but they will be happy. But if you suddenly go and tell there was a case pending against our company, we have to pay a compensation of 2 lakh rupees. Then they will ask you a question, why did you not tell before? I might have not purchased your company's equity share. So that kind of, this is what traditional. We are trying to be playing safe. Okay, that's called conservatism. So based on all these concept and convention, we have to make books of accounts. What are those books of account? Look at this. Just to give me a minute, I'll take you that slide. This and all, by and large, here and there we discussed all these concepts. Okay. Yeah, this also we discussed. Now we have to make records. We have to prepare books of accounts. Okay. This is what we have to discuss now. But before this, just a small framework, overall flow chart of the accounting I'll show you. Then we can come to this. Yeah. Yes. So look at this slide. This gives you the overall framework, the flow of work, what we have to do in the accounting. The other first one is in transaction. What is transaction? We already discussed. Any economic event which take place in the business organization, which involves the transfer of money or money's worth. That is business transaction. In real life, through documents, the accountant will come to know what is the transaction. But here, through question paper, through questions, sentences will be given to you. Goods purchased for 20,000 rupees from Ram and Company by paying cash of 10,000. This is the observation the accountant make from the real life documents. Invoice will be there. Rent paid 20,000 rupees for January 2020-22. How does the accountant know? The landlord might have given the receipt, rent receipt. That will come to the accountant. or it may pop up in the ERPs. Nowadays, we are not doing in the manual accounting. No, even small companies, small enterprise also following ERPs, Tally or any other their own customized ERPs or any other ERPs they buy. Okay, they do it. So it will pop up. Then based on that, they'll write it. Okay, it's very easy. Accounting job is very simple today. Only the analysis is requiring our intellectual capacity. Okay, analysis. Okay. So now transaction is identified, rent paid or purchase of goods. Then immediately it should be recorded either in journal or in subsidiary books. So what is journal? It's a book in which the transactions are recorded chronologically, one after another, based on the time of occurrence, based on the date of occurrence. Suppose I have a lot of transactions in my business. In a single day, 1,000 transactions are there. A book like this, if you take one after another, you have to write means 1,000 transactions. If you write one transaction takes those days maybe 2-3 minutes or 5 minutes. 1,000 into 5,000 minutes. That much time you have to work to make one day transaction. Okay, it becomes little difficult by writing by one person. So what do? We divide the work into different people. Division of work. In HR, you might have studied, no? Division of work. Specialization wise, we're dividing the work. So that is called subsidiary book. Instead of writing all the transaction in a single book, we are going to write a group of transactions into one book, another group into another book. So several people. How many books are there? That many clerk. Those days we'll call bookkeeper or clerk. That many people can be employed and they will keep on writing. He will be writing only one group of transactions. Yeah, I'll come to that. Yeah, that's correct. You're right. So like that. So how do we group them? As Sir is telling, purchase book is one of the subsidiary book. In journal, irrespective of the transaction, date wise, we keep on writing it. How to write? I'll tell you. If the company is big, I don't want to write a journal. I will go for subsidiary book system. In subsidiary book, we have 8 subsidiary book, 8 books, 7 plus 1, 8 are there. First one is purchase book, sales book, purchase return book, sales return book, cash book, bills receivable book, bills payable book, journal proper. So 8 are there, 7 plus 1. The 8th one is nothing but journal. In addition to subsidiary book, if we maintain one more book called journal, that's called journal proper. Same thing. What is there in the journal, same thing is going to be the 8th one. Why we want that? 7 books are not ready to accept some transactions. There are some special transactions that cannot be accepted by any of the subsidiary books. Then we have to obviously go to journal. In addition to 7, we are maintaining one journal. That's called journal proper. Okay. In purchase book, we'll write only the purchase of merchandise, stock, goods, material on credit. Sales book, we record only the sale of material, sale of merchandise, sale of goods on credit basis. Sales return, purchase return. By this time, you might be understanding. If I return some goods to my supplier who has given me the goods, which is defective, that is to be recorded in purchase return book. Sales return, my customers are returning some goods to me. A book to be recorded is sales return book. Irrespective of all the any transactions, if it is involving money, cash, ready cash or bank transaction, that should be recorded in one book. That book is called cash book. Okay. Then bills receivable, bills payable. What is bills receivable? Payment receivable from sales. Yes. How does it differ from sundry debtors? No, I'm asking about, you told very clearly, bills receivable is nothing but the amount receivable from the sales customers. How does it differ from just debtors? Suppose yes, yeah. Vendor is different from customer, no? Both are opposite. Who? Vendor. To vendor, we have to give money. We'll collect. We'll collect. That's clear. Yeah. But how does bills receivable different from sundry debtor? There's one account called sundry debtors. There's one account called bills receivable. But both are accounts receivable only. Both are not the same, but both are in the group called accounts receivable. No, both are credit transaction. Cash transaction means you forget about that fellow who bought from you. He should only remember us. We never remember him because we collected the money. We taken from him. After that, he should be worrying about the product, whether it is good or not. If it is not good, he will come back. That time we will say, once sold, we are sorry, not returnable. But if he has taken on credit, we are behind him. We will send mail after mail. Gentle reminder, then harsh reminder. Then Gundas will go to the place. That is different, right? So why I'm saying, sir is telling receivable, correct. But bills receivable, why it's called bills receivable? Okay. Okay. But people are engineers, negotiable. You have to be little more negotiable. Without using the word negotiable instrument, because then ask what is negotiable instrument? I will tell what is promissory note, what is bill of exchange, then what is check. Everything is from, negotiable instrument, right? Little easier way. Okay. Both are same only. Both are same only. Okay. Anybody? I think we cannot understand from this, madam, that explanation. She knows it. I understand she knows everything correctly, but in such a way that we can understand, she's not able to tell. Anybody? Okay. I am selling 10,000 worth of goods to sir. 10,000 worth of goods. He's my customer. He's taking from me. I'm telling that, sir, I don't have money today. I'll pay you after 3 months. I am also okay. He's my regular customer. I have done background, everything, check. Then I accept it. Okay, he taken the goods. Now, what is the guarantee that he will come and give me after 3 months? He's having a capacity to pay. His background check, everything is done, all green signal. But how does that I know I have a guarantee that he will come and pay? He's having a capacity to pay. Invoice is there. But invoice is not a legal document that you can claim money from him. No, sir, we'll complex so much. It's very simple. Letter of credit is coming little before this. Now sale is affected. Sale is affected. He is a customer. He bought the goods. If it is like this, he's not having any bills now. Bill is different from invoice. Please understand. Colloquial term will say bill. You go to a shop and you buy something, you'll ask for. That is not really bill in accounting. That's called invoice in accounting. Okay, now he has to give in writing that I have taken this much of goods from you in addition to the invoice. Invoice is a normal document that shows only the details of sold items. That's all. What items? Okay. Now I will make one document in which he is going to sign after reading it. I am so and so. I bought this much of commodity from you for this much of worth. I will pay that amount on this particular day. Then he will sign. I will make the document, this format, I will give to him. He will sign. And he will keep one copy. And he will give the original to me. For me, the document what I collect from him is called as bills receivable. For him, the same document is called as bills payable. This is required only for the evidence of the money to be collected from one side. Otherwise, also he is obligated to me to pay the 10,000 rupees. Otherwise, also, I'll believe him. I just don't want him to give any more evidence. That invoice itself, I'll take as an evidence. But that will not stand in the court of law. One thing. Second thing, for me, advantage is I can go to a bank and I can give this document to the bank which I have received from him. I can give that document, sir, 10,000 rupees. There is a claim of mine from so and so. I am ready to transfer that claim to you. You take the right now to claim the money from so and so gentleman. You keep the money with you. But right now, give me some money. The bank is ready to give me 9,500. It is waiting for another 3 months to receive the money from this person, 10,000 rupees. This process is called as discounting of bill of exchange, discounting of bills discounting. This one way giving me some kind of liquidity. I need not go and borrow money from somebody. The bank is giving me because of this evidence. Otherwise, I have to give so many documents. That's different. So this kind of transaction, receiving a bill of exchange from my supplier, from my customer, giving bill of exchange to my supplier, and discounting the bill what I received from my customer at the bank. To record this, there is no place for other books. So I'll create one separate book called bills receivable book. If I receive bill from my customer, bill receivable is not compulsory. If you want, you can ask him to give. Otherwise, you can leave it also. So if I have been asked by my supplier to give the bill, I will give to him with signature. That I will write it in a book. That book is called bills payable book. Okay, right. So there are other transactions which may not be recorded in all these 7 books of accounts. That need to be recorded just like a journal only. Any example? Sorry? What is that? Specific, 1 second. Specific. Okay. All okay. Come to the point. Yes, correct. That's a transaction. We accept 100% transaction. But what is exactly happening? You are paying some amount to lorry. What exactly happening? The goods are moving. Okay, that's not a transaction. But he's telling for the movement of goods, we are supporting. What is that? How the goods are moving from one place to another place? Sir, logistic. Meaning? What is expense? You tell me more clearly, no? Yes, sir. Anybody online would like to tell? Shipping? Or are you paying it? If it is cash, then why do you wait for some other book? Already we have a book called. Is it what you are telling or something else? Okay. If it is so, we have already a special book, no? Cash book. It will go there. Sir, I paid check. It will go to cash book only. Cash book will have 2 columns. One is for hard cash. One is for 2 banks. Clear? Okay. Anything else? Request to the participants online, please mute yourself if you are not talking to us. Yeah. Yes. Any other transaction? Sorry, sir. What exactly? What do you mean by receipts and payments? Yeah, that I understand, but what exactly you mean here? Yes. What do you receive? You are receiving something in cash. So where you write it? No, cash book. If you receive something in cash, cash book. If you pay something in cash, again, which book? Cash book only. Then why that will not come under the 7 books? My question is there any transaction? Can you give an example that will not suit for these 7 books? One is purchase book, sales book, return inward, return outward, cash book, bills receivable, bills payable. What do you mean by freelancing charges? I am pure academician. I may not be knowing your terminology. So you have to burden me. You will tell me exactly what does it mean. Okay, suppose I am taking you to my company, okay, to give some advice to promote some product. Okay, it's a business happening. How does it become a transaction? What is the contract between you and me? Something payment, you cannot write it in the books of accounts. That is illegal, right? You mean to say what is that? Something means? Okay, how are you paying? That is what I'm asking for clarity. If you pay anything for any reason in cash or check or in bank transfer, it should go to. That's it. Simple, clear. Whatever reason it may be. Dividend paid, where you'll write it? Cash book, because it's going as bank transfer to the account, shareholders. Okay. Donation. Suppose immediately one party member is coming. Next year election is due in Karnataka. We are going to contest. Give me 1 lakh. No, I can't give you. Then they are asking, you are giving finally. Then cash, donation. Where you'll write it? Cash book. Government is coming and telling you, you have done extremely good in development of this particular region. So we are giving you a grant of 1 crore. Take it. Where you'll write it? Cash book, that's all. Irrespective of the nature. But what is received, what is paid? In cash means, bank means cash book only. Okay, come back to the question. Can you tell me any one transaction which cannot be recorded in any one of these 7 books? Again, you are telling me. How are you paying service charges? That's it. Over. Nothing. So 8th book is not required. Journal proper is not required. Everything is proper. Discounting of bill, where will go? Cash book, because in bank your amount will increase. Then that's all. Thank you. Class over. Anybody online? You have not listened to anybody from online so far after the break. Okay. Anybody? Okay, suppose old furniture we are selling on credit. Some asset become obsolete. Machine, furniture, non-usable further. You are going to modernize the seating arrangement of the reception of the company. You are just selling those materials. On credit, there is one person, he is having a small office. He wants to buy all those things, but he is telling, sir, give me, I accept for your price, but I don't give money right now. I'll give you after 1 month. How it is accounts? It's accounts receivable only. Broader term. But which book you will write it? Huh? No, I did not ask him. Receivable is second stage. Receivable is an additional support for you, additional guarantee for you that you are having a legal binding on him. But first instance itself, you won't ask him to pay any, give any document in writing. Suppose, assume, I'm not demanding, he's my close friend. He's next to my door, next building, own building. So I don't want him to give any. Why? What is sales book? What is sales book? I did not tell. That's your understanding. That is your guess. Huh? No. I did not talk about the legal point of transaction completed, goods in transit. I never thought about that. You are from your background, you are telling. What I told, sir? I use one particular word. Sale of goods or merchandise or material, which is my main core business. On credit again. Of course, you are one way right because it's sold on credit. But furniture is not my merchandise. What is merchandise? A legal term I'm using. Merchandise means which you are keeping in your company for the purpose of. So, but this furniture is not the purpose of selling it. I bought it long back. Now I want to modernize. Now people are not using this furniture. They think it's old. So I'm going to modernize it. So I'm selling it. Which book will write it? No book we can write it because it is not shooting in the any 7 books. So we are going for the last one, that is journal proper. How are you selling it and what you are selling it? That defines where to go. Scrap, if you tell it is scrap, if it is not a byproduct, if it is not a joint product, then definitely it should go to journal proper. How do you classify that item what you are selling? If it is coming under your merchandise, definitely go to sales book. If it is not coming under your merchandise, you will classify your accounts. Material head. Under head, material head, you have 2-3 accounts. M1, M2, M3, M4. All these are core product of your company. Either you are manufacturing or just buying and selling. Okay. In the process of production, if you have any scrap, if you don't classify that as a byproduct, sometimes it may be a byproduct. A large product you are producing, the nature of the production is itself is giving you some product. Okay, suppose oil company, oil refineries. Okay, there may be some byproduct, or any kind of paint industry. There may be some byproduct. Okay, that will come under sales only, sales book. If it is a purely scrap on credit, then it goes to general property. Okay. So after this, we have to go for the next stage, that is ledger. In journal, we can't come to know how much is total about sales. In sales book, if I take a total of the sales book, can I get the total sales of the company? If I total the sales book, I write whenever sales is happening in the sales book. If I take the total of sales book, can I say that total is the total sales of the company? Yes or no, first of all? Yes. Why, madam? No. What is sales book? No. Sales of the goods on credit. Sir, why, sir? No. No. Your answer is correct, but reasoning is not exactly. Simple logic. Yes, madam? Not entered in the sales book. Cash sales was not entered in the sales book. It is recording only the credit sales. So I may not be knowing what is the total sales. True? Or even in the, sir, I am not following subsidiary system. I follow only general system. Okay. There also, at least in subsidiary book, I can have the total sales of credit base in sales book. But in the general system, I may not be knowing what is the total. I have to again go and total it wherever the sales is there. Okay. So that process, summarizing process or classification process is happening in how much rent you paid in this year. I can't come to know from cash book. If you pay rent, where you will write it? Payment of rent, cash book. But cash book also contains all the payments. It does not only contain rent alone. It contains all other similar payments. So I can't come to know what is the total rent paid. I have to do some calculation. That calculation is done in ledger. So ledger is a book in which the heads of account is taken from the either journal or from the subsidiary books, and only that item is going to be recorded there, and we are going to take the total of that. To know what is the total of that heads, sales how much, purchase how much. So sales ledger, purchase ledger, as many ledger, as many accounts you have, as many heads of account you decide as an accountant, that many ledger will be there in the company. Okay. So ledger gives me the total amount of particular account. After doing this, these three are done in a daily basis. As soon as you complete a transaction, it is recorded in the books of account. Nowadays, simultaneously, not even as soon as, simultaneously, when the invoice is raised, automatically ERP captures that. Okay. So now, after this, what is the basic objective of accounting? Knowing the financial position and to know the financial performance of the company and the financial position of the company. This is a base objective. Before this and after this, one objective I told you, that is recording and informing to everybody about the accounts. Okay, but main objective is this two. Okay, so now I have recorded, but recording is not only objective for me. What is objective? To find out the result of the business transactions. So that is happening in financial statement, preparation of financial statement, otherwise called as final accounts. It's the end of the year we do that. That's why we call it as final accounts. Otherwise, true name is financial statement. What are the statements? We discussed already profit to be identified. Financial position can be identified. Okay. Two equation we discussed. Income minus expenditure is equal to profit or loss. Asset is equal to liability plus equity. So the second equation is going to be in a statement. That statement is called as balance sheet. The first equation is going to be in a statement. That statement is called as profit and loss account or statement of profit and loss. These two put together, we call it as final accounts, otherwise financial statements. Clear to you? Okay. So this is the final state. We are going to finalize our position as well as the performance. So we have to confirm whatever we have done in these three or in these two or in these two are correct or not. Those days, people were making it. Nowadays, machine, program. Okay, so there was a chance of errors. Okay, so we want to confirm. Okay, before the exam, there will be a revision class, right? To confirm everything is fine, like that. Okay, that's what we have a stage here, that is trial balance. Trial. We are checking whether all the accounts are correct or not. Sir, how do we check it? Suppose there was an invoice. The accountant was talking to the stenographer or typist, and he is missing that invoice. How it can be identified here? Nowadays, we have a, what you can say, the synchronized system. Vendor list will be there. You cannot make a payment. Those days it's possible, but today it's not possible. Vendor list will be there. To that person only can pay the money. Already account of the vendor, account number, bank account number of the vendor will be there linked in your account number. So it is not that easy today. But those days, if one invoice is missing, then payment cannot be done. He may be claiming, means that time we'll understand, okay, this entry was missing. But today it is not so. It's very easy to find out. But there was a situation. So we had a practice of preparing a trial balance. Trial balance is not a guarantee that your accounts are all correct. Mathematically, it is correct. Suppose you are missing a particular transaction, trial balance will not tell you missed a transaction. It is not that artificial intelligent. It won't tell you. Suppose you missed one part of the transaction. There was a purchase from X Limited, is a vendor. You wrote it in the purchase book, but you forgot to post that into vendor account, sundry creditor account. That time it will tell you, because it won't tally. Are you able to understand what the tally means? Matching. Okay. Equation. Dual aspect. Always profit should be equal to income minus expenditure. Assets should be equal to liability plus equity. In this context, if one is missing, one side is missing, the other side will be more, this side will be less. So easily we can identify there is a problem. So that kind of thing is possible in. So that is what we prepare a trial balance. Okay. If trial balance is agreeing, giving a green signal that yes, I am okay, you can go forward. That time we'll go for preparation of this. Otherwise, if there is any problem in this stage, if it is not matching, then you have to do rectification of errors, which is not required. We are not going to do that. We assume that it's correct and we are going to this stage. But logically understand, if there is anything, we have to again go and check it, and we have to bring that into process, give effect, again adjusted trial balance, then we'll go to the next year. Okay. These two are prepared in this stage, then next year again, opening of next year. So this is the overall framework, the flow chart of the accounting process. Now come back to this journal. Yeah. To make the journal, we have some rule. We have some bookkeeping rule. What is that? Double entry bookkeeping rule. We already discussed. We are following the dual aspect concept. Okay, double entry bookkeeping rule. What is double entry bookkeeping? Each and every transaction has two aspects. Two aspects are going to be recorded in the books of account. That is called double entry. That is why the equation comes like that. Okay. Now, as per the double entry bookkeeping, we have two accounts. Broadly, all the things, whatever you have, we have 5 items we discussed. What is that? Equity, liability, asset, income, expenditure. Capital is called equity. Either you can use the word capital, but capital is just like lower level, a normal word. What I introduced, Reddy was introducing 1 lakh or 10 lakh in the beginning, that is capital. But equity means capital introduced plus or minus profit earned or loss occurred. Capital will increase or capital will decrease depending upon the performance of the company. Okay, that is what we call it as equity. Equity means net worth of the business, or you can call it as book value of the claim of whom? Book value of the claim of owners in the business. The capital. Okay, so 5 words: equity, income, expenditure, asset, liability. Along with this, in the first equation, we get one result that is called profit. Okay, so only these words we are going to discuss in detail. Okay, so why I'm telling this? To record what is expenditure, to record what is income, to record what is asset, we have some rules. All these 5 items are going to be classified into only 2 categories: personal account and real account. Personal account, what is account? The relationship, financial relationship between one entity to another entity. Some heads of account, you are only creating it. If you're really good in accounting, you can just reverse whatever the accounting is saying, you will get the same answer. Account just plus or minus, that's all. But it's not doing that, they are telling some logic. Okay, so what is that? Personal account and impersonal account. Personal account means any account that relates to natural as well as artificial person. Dayananda Sagar University is an artificial person. So it's called personal account. Rajesh, natural person, it's called personal account. Sold goods to Rajesh. Rajesh is a person. So the transaction affects which account? Rajesh account. Person. What else is there in that same transaction? Sold goods to Rajesh. What else is there? Rajesh is getting benefit. What benefit is getting? Goods. So goods are going out of our company. So far we own 1 lakh worth of goods. Now after sales, value of goods are coming down. So 2 accounts are affected: goods account and Rajesh is person. Goods is not a person, so it is called impersonal. Okay, in impersonal we have 2. In impersonal we have 2. What is that? Real and nominal. Goods are real or nominal? What is real? Which is there really. The goods are categorized as real account. Suppose paid salary to Ravi, who is a manager of the company. What are the accounts affected here? Paid salary of rupees 20,000 to Mr. Ravi, who is a manager. Why personal account? What personal account is affected here? Ravi is a person, no doubt. But who is Ravi? Why he is getting money? For service. Is he going to pay back the money? Have you paid the money for the contract what you created before any application you made from him? You did not borrow any money from him. You are not lending any money to him. So Ravi is immaterial here. To whom you are paying? Employee you are paying. What you are paying? Salary you are paying. So in this case, Ravi is immaterial. In the place of Ravi, Rajesh, Sunil, whoever it may be, you are paying salary. That's all. Okay, he is immaterial. Then what is material here? What are the 2 accounts are affected? Forget about the category. You tell me what really affects there. Out of 5, income, expenditure, equity, liability, asset. Out of these 5, which are affected here? Expenditure. So expenditure is real or nominal. First of all, you decide whether it is personal or impersonal. Expenditure is impersonal. What expenditure it is? Salary. Purely it is impersonal. In impersonal, we have nominal. You tell me now, is it real or nominal? Why is it real? Yeah, that we agreed already. Why expense you want to categorize into real? Suppose the same 20,000 you have given to your landlord. That time, what you will call that? Same 20,000. Ravi did not come that time. Ravi is coming after 1 hour. You paid the same 20,000 to landlord. What you will call the 20,000 now? Rent. Landlord did not come, Ravi also did not come. Some political party came and you given the 20,000 to them. What do you call that time? So now the 20,000 is taking its name depending upon the purpose for which it is going. That is why it is called. You are only naming it. Real means what? There should be something existing. Furniture. Suppose same 20,000 rupees. You are buying furniture by paying 20,000. Now which accounts are affected? Real account. Furniture, not goods, furniture. Later we'll decide it's a good or asset. Okay. Fatima furniture is buying a furniture, it becomes goods. Prakash plastic is buying furniture, that time it becomes company name, Prakash Plastic. It's buying furniture. That time that becomes asset, fixed asset. Fatima Furniture Limited is buying furniture. That time it becomes goods, material, merchandise. Okay, now come back to the classification of accounts. So rent, salary, donation, interest, commission, all these things are. Yeah, 1 second. Yes, sir. The first one, yeah, we sold goods to Rajesh. Is that? Yeah. Yes, he's a customer. He is a person, right? Yes, we are categorizing, but basically he is a person. After he is a person, why you want to categorize into something else? Ravi is a person, I don't deny it. Ravi is a person. But why do you give importance to Ravi? In the place of Ravi, another person is there also, will give salary. Salary is given to whom? Not Ravi, but to the manager, employee. If you give 10,000 rupees to Mr. Ravi, then you have to consider Mr. Ravi as a person, because he is going to give back the money after some time, or we might have taken him from him before some time. We are settling it. Otherwise, same Ravi you are giving, manager, 10,000, not as a salary, but as an advance. That time, Ravi is important. We have to keep Ravi in our mind always, because he has taken money from us. We have to get back that money afterwards, or you have to deduct from the salary over a period of time. So that's how you have to look into the classification of account. So payment of salary, 10,000 rupees. What are the two accounts that are affected? All the transactions will affect two accounts, twofold effect, no, dual aspect. So payment of salary, 10,000 rupees. What are the two accounts that are affected? Forget about nominal, real, personal. You tell the name of the account. Salary account is affected. My expense is increasing in the 5 category. Expense is increasing. Another one, bank or cash is reducing. So bank cash, assume that payment is done through cash. So cash account is affected. Another one is salary account is affected. Now we come to know what is these two accounts fall under which category. Salary is coming under expense. So expense is a nominal account. Cash is real, hot cash. So it comes under real account. Purchased goods on credit from Rajesh Enterprise. What are the two accounts affected? First, you tell the label of the name of the account. Then we categorize it is real or nominal or person. Goods account affected. Correct, na sir? So far I had less number of items. Now it's increasing. Goods account affected. Okay, then my vendor, my creditor is increasing. My claim, external claim in the business is increasing, right? Liability is increasing actually. Which liability? External liability. Who is that? Vendor. What's the name? Rajesh. So personal account and real account. You have to identify like this. Anyone transaction from your side? Yeah, already we exceeded. Okay, another 2-3 minutes. Is it okay? Burdenable? Yeah. Any 1 or 2 transaction from your side? Yes, all are working in company only, no? Transaction, madam? Example for transaction to know the accounts head. Sorry, you asked the question, I'll tell the answer, but you are asking the question to me. That's very difficult. Yes, madam. Sales return. To whom you returned? We are the customer of some company. Ah. Sales return. Okay. We are getting back the goods what we sold to our customer. Who is that? Let him be. But what is the name? Again, Rajesh only. You like Rajesh very much? Rajesh, he likes very much. Okay. Okay, gender bias. We'll take something else. Yes, madam. Received goods from Miss Jasmine and Miss Jasmine, who was our customer, who previously. How much? 20,000 rupees. Now, what's the account affected? Customer, person, lady. Okay, now another side is goods. The stock is going to increase. So real account, personal account. Same thing, just a reverse. When you sell goods, percent, don't think that is confusing. Another 2 minutes it will be ready. See, when you sell the person and the goods, when you get back the goods and the person, same thing. There is no change. Only reverse case. You are giving the goods first time, second time you are getting. He is forcefully giving back the goods to you. Return. That's it. Buying an asset for how we are buying. That's what I'm asking. Yeah. Buying an asset. Suppose buying a building from Purvankara company on credit. Now you tell me which are the account affected. So far your building account is 0 or some 1 lakh. Now new addition to the building is made. So building value is increasing. So building account is affected. Another one, creditor. Purvankara is a supplier of asset to you, vendor of the asset, but you did not give money. So liability increases newly. So far you don't have any liability, but new liability comes in. So Purvankara is a person, personal account, liability. This side is building, real asset, real account. So real account and personal account are affected. One transaction, only 2 accounts will affect. Dual aspect concept, no. If you invent something, triple aspect concept, then we can think about that. No, that's not my claim. My claim is any transaction should fall under 2 accounts. Only these 2 accounts I'm not telling. How many accounts are there? 3. Personal account, real account, and nominal account. Any transaction should fall under any one of these 3, but only 2 will be there. Any other example? Just now we discussed, no. Salary, interest, commission, donation, puja expense, sundry expense, miscellaneous expense. Yeah, all expenditure. All expenditure. See, you are only naming it. If you only name that, that becomes nominal account. Who told you to call it as rent, the money paid to landlord? Why don't you call it some other name? Who coined it? We. That's why it's called nominal account. Income also. Sometimes commission received. What account it is? Nominal account. Interest received, rent received, all are nominal only. Yes, sir, something you are asking? No, tax goes to government. You are always telling the one part of it. Please be clear in the sentence. Tax goes to, tax itself is an account. You already come to an account and you are asking where it goes. Payment of tax, rupees 20,000. How do we understand this transaction in terms of name of the account? The class will answer now. Yes, sir. Anybody? Why personal? So government of India is going to give back the 20,000 rupees later. When personal account comes into picture, there is a personal financial obligations between us and another entity or another person. That time only person, we have to remember the person. 2 times we'll remember the person. One is when we lend money, when some obligation is created. Otherwise, when we settle the obligations. Otherwise, we don't remember anybody. Government of India is not even to be remembered by us after the tax is paid. We don't want to remember. Why should we remember? Again, it comes and asks you some money. So what are the accounts affected there? Real account and nominal account. The money paid to government, we are calling it as tax. We only name it. So real and nominal. Cash comes down, tax liability also comes down. Asset comes down, liability comes down. So equation remains in the same equation. Okay, it's equated. So it's real and real and nominal. Any one more example, we'll close it. Yeah. One more example, then close it. After closing, no more example. Yes, sir. Anybody from online? We lost you. I think we lost you people, or you lost me. I don't know. Am I audible?
Yes, sir, you are audible.
Yes, thank you. Yeah. I'm sure that you did not lose me. Okay, fine. Yes, sir. Yeah. Good question. In balance sheet, what will we record? Asset, liability, and equity. Very good. That second equation. That is going to be in a statement form. Asset one side, equity and liability on another side. Okay. His question is, why do we need all these things? If we say asset, there are so many subcategory into that. Whenever transaction happens, how do I categorize into this category? 5 category based on this only. Expenses always nominal account. Asset always real account. Asset, all the assets are real account. Okay. For that reason, we need to this. And again, not only that, one more reason is to prepare your journal. I have shown you the journal format, no? I think you have overseen that when I was changing the slide. To prepare the journal, we need to follow certain principle. This is the principle, rules of accounting. Okay. So to follow these rules of accounting, we should know what account is getting affected. Okay. Your nominal account will go to profit and loss account. Comparing income and expenditure, that will go to profit and loss account. Real account goes to balance sheet. For that reason, we need this classification. More than that, to make a journal entry, we need this. Without this also, you can make it. Suppose you understand the basic concept of all plus income, all minus as expenditure. The result will be either plus or minus, which sign is more, either profit or loss. You can make it, but that is not always easy for us. First, you are cheap. If you make 4 plus 4, you want to add 4 plus 4, which is easy. Making a program and adding it, or making a addition. Mentally making addition is easy, but I'm telling you 243 plus 723. Now which one is easy? Program is easy or manual is easy? But making a program is little effort is required. So you are making that effort right now. It may seem to be easy. So 2 plus 2 can be added simply. Why are you telling us to make a program and add it? Because next I may be telling you to add 9,997 plus 7,497. If you give that in program, it will give you the answer right. So that's what. Are you convinced? No. Okay. Okay. Next, I think we have too much time we are taking. So next class we can just continue from there. This is the basic rule of accounting. Personal account rule says debit the receiver, credit the giver. Real account rule says debit what comes in, credit what goes out. Nominal account says debit all expense and losses, credit all income and gain. Don't worry about this rule. I will make it very simple in the next class in the beginning. One request for all of you, appeal to all of you, especially those who are changed to accounting, to get comfort with accounting, download the CBSE textbook of 11th standard. Don't think that, sir, we are executive MBA student. Why are you telling us to go back to 11th standard? That too, the course which you have treated as a very last preference in your schooling, engineering, science, then arts. Why are you telling us to go there? But it is demand now. You have to learn something. Our class is only supporting to a certain extent. You have to have your own learning also. This kind of mode of education.
So what is the name of the book?
I'll tell you. It's not a
Okay.
name of the book. It is just from NCRT website or CBSE website. You go to CBSE website, Central Board of Secondary Education, Government of India's website, CBSE or NCRT website. If you go there, 11th standard accountancy textbook. Download, it's available freely. Download the PDF file, or if you are already having the book, if you studied, take that, or from any of your friends, you can take it. Completely read the first 3 chapters. Introduction, journal, ledger. Introduction, journal, ledger. That will supplement, that will support the basic understanding of the class. Okay, you have another 1 week time. No, next week you don't have class.
No, sir.
As per the timetable, alternative weeks only. So what you do, you make use of these days, download the book. Whenever you are free, whenever you feel boring or whenever you have some time, just go to this. Okay, read. Write down any difficult words which you are thinking that's very technical, which is not known to me. Write down. I'll ask in the next class for 5 minutes, whatever you noted down, homework. And again, if possible, make one WhatsApp group only for accounting class. There you can just post all these terminologies, whichever you are coming across, okay, in the textbook or some other place. We answer. Some students from BCom or BBA, they answer. Otherwise, I'll also step in and I'll answer. So that's a compulsory requirement for the learning. Those who are new to accounts. And again, one more thing, the assignment. Remind me in the next class, I'll give you about details about the assignment. Okay, this 1 week, you just check what it is. Course plan is there. This PPT is there in your LMS. You go through that. Okay, seriously, if you take this work, then accounting is nothing. All the things up to PhD, what is in accounting can be learned within 6 months. Everything. But we are not going to learn everything. You are going to learn only a portion of it. It's very easy. That comfort I'm giving you. So please take from your own aspect also. Okay. Thank you so much. Anything from online? Yes, sir. Nothing. Okay. Thank you so much. We'll see you in the next class. Yeah.
Thank you, sir. Bye.
Thank you.
That's what I'm planning. You want now only?
Thank you, sir. Thank you very much.
Sufficient. Thank you, sir. Thank you. Time will
Thank you,
be
sir.
given to you. How only you want? It's too early
Thank
now.
you, sir. Bye.
Just within 1 hour, 3 hours, how can you do the assignment? Otherwise, you can see the assignment, what it is, but I'll explain it in the next class. From there, you take it. Yeah, thank you. Thank you so much. See you in the next class.
Thank you,
Those who
sir.
are online, I'm
You.
just winding up with your permission.
Sure, sir.
Thank you.
Thank you.
Thank you. Thank you.